All right, everybody. Let me get the link shared out here. Starting a few minutes late. Just sharing out the link on Twitter. Give everyone a few minutes to get in here. Good day, good day. Okay, so we're going to be talking about some of the higher time frame ideas I've already talked a lot about, and some of the local ideas. Because I think there's some kind of critical local ideas. I am interested in shorts, but I guess I won't be so surprised to see price carry a little bit higher. Take some of these highs. There's also scenarios, of course, where we don't. We have some big bearish divergences forming locally on Bybit. Some very aggressive longs coming in. Price is kind of testing an important local level right now. I'm kind of interested to see what happens specifically right here. If this little local breakout fails or not. I actually want to go over to order flow. Because I think there's some scenarios where we actually reject here and continue a downtrend, or maybe take some more highs into the New York Open. All right. So if we zoom out, we can see there's quite large bearish divergences forming here in order flow on Bybit, BTC, USDT. Some really aggressive longing coming in here. Price is currently failing to make a new high, but that can change quickly if we can break up out of these highs. Maybe take some of these highs into the New York Open. Definitely would be interested in shorting that. But with these big bearish divergences forming, I'm very interested to see if we just put in a lower high here. And I'm going to go over some Elliott wave ideas, some of the major structural ideas. But like I said, a little bit interested to see what happens here just because of these big bearish divergences here. On Binance, we have the opposite. We have bullish divergences here, here. So order flow is not really agreeing between the two. BTC USD, also bullish divergences. So yeah, New York opens in 2.5 hours. There's kind of two ways to look at this local price action, I think. One is that we're just continuing our downtrend. You know, you could say on the 4-hour chart, since we put in our all-time highs, just a series of lower lows, lower high, lower low, lower high, lower low, lower high. This looked like a potential higher low, lower high, lower low. And maybe we don't even take these highs. But this wouldn't look so bad for the bearish ideas. Come and take these highs into this SR level. And I'll almost certainly be shorting that. I should say, I'm interested to see what happens here because I am in a short. I am in a short off these bearish divergences. I took a short up here yesterday, and I was fortunate enough to TP the bottom of this move because there were some really aggressive shorts opening here. And then I took a half R short here for a potential lower high that got stopped out. So I essentially traded this yesterday like this. Took the first short, took profits down here, shorted the lower high, got stopped out of that, was interested in getting back into a short yesterday, but there was no trigger and I went to sleep. And then here with the big bearish divergences, I'm short again off of this, and I'm probably going to short, for potentially a breakdown to 68K, I'm probably going to short a sweep of these highs as well, if that comes in the New York Open. But anyways, maybe I'll just go over the high time frame context here while we wait to see what happens at this local level. Some aggressive longs opening. I'm probably, if we don't just reject here, I'm probably leaning towards us just pushing up and taking these highs. I'm very open to a lower high here. But anyways, let's zoom out. Let's look at the higher time frame ideas. Let me get rid of all these alerts. Some higher time frame alerts, some scalping alerts. All right, so this is no surprise if you've followed some of my live streams and updates. I really am interested in this level. I'm actually interested in trying to short towards it, but pretty cautious because there's, of course, ideas of bouncing here and even in bearish scenarios, pushing up and taking these highs. So willing to put on a bit of risk, but certainly aware that shorts like this, they have a nice risk reward aspect to them, but are they super probable to work? Probably not. Like you have to maintain all these lower highs, lower high, and this is a major target for a potential TP on a breakdown, could potentially hold. Even shorts like this, you know, but they're, as far as targeting into the 66K level, stuff like this gets you 15 to 1 on your risk. And I think the odds of justify the trades. But anyways, on log scale, the major target here is the GP, the point of control. That doesn't change whether it's log scale or not. And taking this impulse low. So there's three major, there's many major confluences, but I think the primary structural ideas, taking this impulse low, the point of control, the 618 on log scale of this move, and I'll look at non-log in a second. It's also kind of a retest of 2021 all-time high region. And that point of control looks quite nice from our previous range. On non-log, there's a major trend line there. If price makes its way down there relatively quickly, depending on how you draw it. I was looking at a gentleman by the name of X Force Global's count here. And so he has this counted as a 1, 2, 3, 4 potential wave 5 coming. Probably better to look at this on log. And we'll get into the nitty gritty here. And this is as a potential 1, 2, which I have a similar idea here. And what I think is interesting about this is he has this counted as a WXY, which means I was kind of trying to, I only spent about 20 minutes, 15 minutes looking at this as a WXY, which means looking for a zigzag down into this level. And that does get kind of interesting here because we could end up in a relatively choppy range if our A is not in. So if our A is in, we're putting in our B and C to follow. If our A isn't in yet, something like this would actually look kind of good. And sorry for the mess here. I'll kind of draw it out, which is we could even have some kind of continued correction here, put in a wave 4, put in our wave 5, then put in our B leg, so form a little bit of a range here. And what I kind of like about this idea is I think this is the type of structure that you wouldn't be surprised to see a range on, right? Like a lot of people longing into some of these potential breakouts, getting trapped, sweeping the lows, taking stops, aggressively longing again, taking stops for a final breakdown, and just kind of have a really choppy couple weeks, or a week rather. I just don't know if I've quite counted this accurately for the potential correction, but I don't mind this idea because if we get something like this, this gives us a bounce off of our non-log GP. It aligns from our wave X, a GP right above all these highs. So even failing to take these highs now kind of looks good. So we essentially have something, potentially something like this, maybe tag these highs, A, and then B comes in at the 618 of the move, takes all of these highs, get a big SR flip, and then continuation down to the final target. So that's one thing that's kind of tricky about these high time frame ideas, is that you could be watching this level and it could be looking like it's coming for weeks, but you just end up ranging. And you can almost end up psychologically scrapping the idea because it's like, oh, we've bounced again. Oh, we've bounced again. Doesn't look like it's coming. These lows are holding up. And I'm kind of interested in just trading this as a range until that level comes. That's why I'm kind of thinking about this. So essentially looking for, whether we put in the lower high here first, that's fine. Essentially looking at this as a range and willing to trade shorts up here down into the 68K level with some TPs, but also willing to take longs here. Probably run a little deeper on something like this. And I'd say there's almost a 0% chance. For one, I'm going to have limit orders set down at 67, 68K. anytime I'm not at the charts. And those might just get filled and stopped out. There's almost zero chance that I don't take that long. If I'm at the charts, I'll manually enter those trades. I would say there's such a low chance that this level isn't at least reactive, where if you run into it, you're getting something to trigger along. And so I would say, unless price, like I'm sitting at the chart watching, waiting, and price just runs straight through the level, I'm going to be in a long there and might be taking a stop. It's definitely somewhere I'm willing to put on risk in almost any scenario. I don't want to get too short biased here. I would say this, you know, sometimes flipping a chart upside down can be helpful. If you look at the chart like this, you know, let's just kind of clean up some of this structure. We have this big void of structure here on the chart, and it looks pretty unlikely, especially given where price is now, you know, even if we come like this, that we don't tag this level. At this point, this looks, we have a grinding kind of rounded trending structure. If you look at this as a breakout, you know, price is breaking out, holding out the breakout, strong downtrend. Maybe come retest this, but it looks very unlikely that price doesn't run this level. And this to me just looks like such a clean long setup. In the case of an inverted chart, it's a short setup. And there's the tricky part about this locally is there are just so many ways that make sense for price to get here. You know, we could literally do this for the next week. We could break straight down. And so guessing how price would get there is kind of tricky, but structuring some shorts towards that level, to me, it's just a matter of managing and accepting some risk. I think you have some really simple structures around horizontal levels and trending ideas. I think probably the kind of highest you're kind of looking for price to go for these aggressive shorts is if we push up into these highs, into this trending structure. So in that case, you're kind of setting yourself up for multiple shorts getting stopped out. And the question you just have to ask yourself, or I have to ask myself, is what am I willing to short here and why? And I think I'm willing to short everything, although I think I can be a little bit picky with some of these shorts in terms of entry triggers. Yeah, I'll look at some alts too, so I haven't really read the chat yet. So I'll kind of say what my idea was for yesterday's short, and because I think it's kind of a emblematic of how I plan to trade all of these, which is just looking for some tight setups, lock in some TPs, and just look to potentially add back to the shorts if I get the opportunity. But let's just go over that really quickly. because the same concepts are probably going to be applied to most of the trades I'm looking to take. All right. So we're going to just pop over to the Discord really quickly. So this is just yesterday in the low time frame Bitcoin's channel. And I kind of described that I was interested in shorts and what I would be willing to short aggressively. This is just the 1 minute chart. And here, this trend line, just for context, is this trend line. So anyways, what I was looking to short basically was price grinding up into this level, some aggressive longs opening up. And I made a little video just explaining what I was looking for and why, like a 3-minute video. And, you know, there's a bunch of different ideas I could have for shorts. If we got this kind of quick move up through the highs, maybe run some lows, I'd be willing to take that short. And so I took the short, and I kind of made a joke that, well, I made a few jokes, some serious, that not all of the components I was looking for a short were there. So I'd kind of rate it like a B+. It's a B+ short. We're taking the highs, trend line, kind of trappy. There's still a lot of longs to wipe out to the downside. And so probably worth taking a long, but I said I would rate it a B+, probably enough to look for the short, but not with stars in my eyes. So not really feeling like it's the best short ever, but nice little local trigger. And then I made the joke, I actually rated it an A+ now that it's working. And then right at the New York Open, I said, I give it a D- now. We came in, just tagged this high. I didn't get stopped out of the short. And then tons of longs open here. This is why this is kind of informative, because it's the type of thing I'd be looking for any short in order flow. And maybe we get something like that New York Open, is as price runs the highs, you have tons of shorts getting stopped out, tons of delta, lots of longs opening aggressively on the way down. So we have the initial rejection, a really just clean, sharp rejection of the highs. And then into the downtrend, longs opening aggressively. And then here at the low, this was the target for the short. I just said, watching here for a TP, we'll let it nuke if it nukes, GP right below. Just the longs that opened aggressively on the way down got wrecked. And I said I TP'd lots of shorts opening at the lows. So as soon as I see these lows come in, all these longs getting stopped out, shorts opening aggressively, I'm just, even though I kind of would like to trade some of these local shorts towards 68K, when I see a bunch of shorts opening here aggressively, as we take all these lows and longs, I just have to TP on that short, right? And so there might be similar cases here where I start getting what I want to see, but it just looks like, for example, let's just say into the New York Open today, and we might actually be live until the New York Open, we'll see. Whether this holds as a lower high, or we get something like this, with tons of shorts getting stopped out, longs trapped, and then we get a big rejection. If price comes into this level and just runs this low, hundreds of millions of longs getting stopped out, shorts opening aggressively, again, although I would love to just hold a short to 68K there, I'm just going to TP on my shorts and still consider that this has a lot of ranging potential over the next week. And remember that this is a nice level, and a nice level where I'm willing to swing long towards new all-time highs. But just because it's a nice level, I can't trade every idea to that level, right? Like, all of this structure still really matters, and I'm hoping to have some shorts running locally to this level if it comes. But I think you're going to get chopped up a lot here if you aren't willing to TP on some of those trades. I also made a video last week, I put in the public Discord with the idea of shorting Wednesday pumps. We are coming into a Wednesday now, and just the statistical kind of significance of fading whatever's happening on a Wednesday. And so it's worth noting that if we get a big pump to here or to here, would kind of meet the criteria of a Wednesday pump. There are some scenarios also where I just don't take the short up at these highs, and that's if price just breaks straight through. And maybe that comes in the New York Open, and maybe I'm still live then. We can kind of talk through some of that. But in that case, I'll just be looking for these highs. So if we start coming up to these highs and price just starts breaking out, grinding up to, there's just no short trigger there. No reason to get short if there's not something happening here that looks shortable. And short this on a Wednesday looks good to me too, so. I did kind of have this as a trending idea as well. I actually said in the Discord today that we have these big bearish divergences here, and I think it's probably, I still think it's likely, it's just my opinion, that we trade towards 66K. And you could call this like a big bearish divergence. Again, I inverted the chart here just to give a different perspective. You know, we could be saying this is a breakout and we're retesting, but it does look a little bit silly not to run this high on the chart for the bearish ideas. So it's kind of a tricky spot here. The shorts kind of look good, but it looks kind of strange not to at least do that, and maybe even this. Okay, let's talk about some alts. I just happened to see a question. What is your ETH level that is equivalent to 66 to 68K? I would say the structural equivalent on ETH is just to take this low at 1500. Say it's just the structural equivalent, like all this goes. Maybe even take this low too. The reality is if Bitcoin goes to 66, 68K, a lot of these alts are going to see much lower. This is like another 30% lower on ETH. That looks about right. Bitcoin would be another 20% lower. And someone asked about Doge. It's kind of a little tricky here. It probably is honestly something like 11 cents on Doge. Right now, obviously, Doge doesn't look particularly weak, but it's probably just something like this, and it's probably 11 cents, 12, 11 cents, 30%, 35, 40%. A lot of alts, just perfect GP rejections here. ETH as well, actually. After the Trump scam pump. 618, 618. I think there's a chance that some of these alts just hold up. Like XRP could just run this wick. But it's probably somewhere into these lows as well. ADA, another one that probably doesn't need to make a new low here, but it probably is into these lows. It's probably somewhere in here. There shouldn't be anything wrong with my mic, but maybe there is. Maybe, honestly, I haven't listened to any of my live streams or anything, so I have no idea. I have no idea. Is it too quiet? Is it noisy? Okay. Other people are saying it's fine. Someone asking, why do I think we're going to 68K? I think structurally, technically, it makes the most sense for this rejection. Like, well, price is here. Obviously, price can bounce anywhere. I mean, to be fair, and I'm just going to give this context. Just because, I mean, this just gives a sense of like how tricky it is to think about levels. But think about the timing there. So if I go back to a post, this is from over 3 months ago. This is in the public Discord. So I'd been basically off for the New Year's and Christmas. But basically what I was looking for was generally something like this. A push up to all-time highs from these lows here, make a new all-time high, and then I've already had this level on my chart. Although there I was looking at the non-log variation, and I think the log variation is a little bit better, but back towards 70K. And so I actually made a video on this for the members. I don't think I made it for the, again, this is back 3 months ago. Just pointing out this idea, right? So this is kind of like a higher time frame bearish idea, locally bullish, but it's kind of saying, hey, if we can form a bit of a range here, push up towards an all-time high, maybe towards 114K, and we get a rejection here, in this case, breaking down the range, we can intersect with all of this trending structure, and this aligns our 1618 extensions and our 618 GP and all this with this. So just basically imagining what levels will be at this 70K low. We have the point of control right here. And so I listed all this. We have a major POC at the lower bounds of this level, potential intersecting trend line structure, all this different stuff. So even back then, 3 months ago, I understand that we kind of need to create some of these levels and make them look really good. We kind of need to put in a new high. But after that, if we can reject from there, this level just looks so clean and technical on the chart. And so for me, as we're approaching, and so I even took that long, right? So I took this long based on that idea. So even though back here, this is this long, I'm looking for this low. In the midterm, I'm kind of bullish. And then you have to kind of extrapolate I have to extrapolate that all now. So it's like we're almost to the level. There's probably still some long setups and short setups, but just because you're looking at 68K as a major target, are you wanting to short here? Probably not. You know, maybe look to run some highs and carry on to that target. But we're essentially coming to the culmination of that idea, which is all the trending technical structure, horizontal structure, kind of just looks so clean on the chart. There's no reason to think that this is bullish at this point, other than it just could become bullish. Like right now, this is just a big downtrend, lower highs, lower lows. The range is breaking down. We're trading under the range. Yes, we could reclaim it and things could start looking much more bullish and anything's possible and we could bounce from, again, anywhere. But right now, is there any reason to think, no way we're going lower? I don't think so. I mean, at least give it a 50-50 that we're going lower. But I would say that you probably have to be a little bit more bearish than that because a lot of major structure is breaking down. And we're trading under it right now, and we've had chances to reclaim it and we haven't. You could also say like good news, there's bearish reactions to good news and all those things. So if you're at least give it a 50-50 that we see lower from here, not higher, well, where are the major ideas for lower? I think this is the type of level. Of course, even this can just go and we can see much lower. I don't think that's probably the most likely scenario, but it's always possible. Yeah, I would just say, you know, it's kind of like, for example, if we look at order flow a bit here, and I think these highs are probably going to get taken locally. These longs are going to disagree with lower, right? Like you don't open these types of aggressive positions if you're expecting lower. You don't open $73 million of aggressive longs, 41 million, 25, 35 million. Typically these aggressive buyers, you know, there's a decent amount up here, 68 million, 17, 23, some shorts getting stopped out, some aggressive, or with stop losses, aggressively closing, 22 million aggressive longs here. You don't open these if you're suspecting lower locally or on the midterm. This is quite a big bearish divergence. Like this is like exactly what I want to see in order flow for bearish continuation. We have some lower time frame examples of it that I wouldn't mind just covering, I guess, quickly. Again, some of these other exchanges not quite agreeing, but I'm only recently looking at Binance again. I have a hard time deferring to it as the most relevant order flow, but I'm still keeping an eye on it. So it's like a higher time frame version of this. When we swept the highs yesterday, we see some shorts getting stopped out, and as price starts retracing, first we see lots of longs getting stopped out aggressively, or with closing aggressively, stop losses, 65 million negative delta, and immediately after we see massive longs opening, 105 million in this 5-minute candle. And I pointed that out at the time because this is quite bearish, and you actually get a local bearish divergence. So price is forming a lower high, CVD, CVD is forming a higher high. That's just a shorthand way of telling you that relative to this price action, you have really aggressive longs opening. The main idea here is the 105 million, and they kind of get shut down and ran out, right? So aggressive buyers typically become aggressive sellers really quickly when price doesn't do what they obviously were anticipating it to do, which is why they bought aggressively into this rally. And then you see a little bit more of that. Some aggressive buying here, aggressive buying. that holds up. But this is, in the context of this chart, I would say a really significant bearish divergence. We're making like this, and actually, I'm gonna just make this point a little bit more clear. So this is the 5-minute chart. This is CVD. It's going straight up, essentially. Like this is just a short, almost based on order flow for me. It doesn't mean it's going to work. It's just, if you're not going to short this based on order flow, what are you going to short? And is there other reasons to get short? Yeah, there's the Elliott wave ideas. There's the downtrend. There's all this different stuff. The only thing that's kind of spooky about getting short here is you see all these highs, right? It's like you might even be bearish, but you're kind of like, you want to short, but you also are like, these highs are probably getting taken, and what if we just run the highs? I don't want to get stopped out or have to deal with price kind of running away from me for a little bit, so I'll wait till these highs get taken. I think that's the tricky part about getting short here. But if we're just looking at order flow, we have this super aggressive longs coming in. I mean, we could say, you know, if we want to look at any parallels, and we're going to just be using these spikes in CVD to look at as potential parallels. This is a pretty aggressive CVD spike. You know, we're seeing 78 million positive delta, 96 million in 5-minute candles, and you can just see it in the CVD, right? So CVD is just, it stands for cumulative volume delta. It's just the delta between market buying and market selling in the candle. So there's volume, there's some market sellers, there's some market buyers. If CVD is going up, you have a positive delta, which means there's more aggressive buyers, but you have to remember, for every buyer, there's a seller. So there's limit longs, limit shorts, limit closes, limit opens, and then there's the aggressive buyers, which are buying at market. So they're chasing price in a sense. And you would say that you have to have a lot of conviction, right, to like market buy into this, or a lot of fear if you're short to market close into this. It's like, oh shit, I'm short and price is going up. So you see a big spike in delta as a bunch of shorts close, or a big spike in delta as a bunch of longs open aggressively at market. So this, again, a relatively large increase in delta over a short period of time, and that ended quite bearishly locally. Here again, this was actually a pretty relatively large spike in delta. Big spike in delta here. Little sweep of these highs, a little SR flip, runs new lows. You have it on lower time frames, little spike in delta, getting ran out. Here, as price is ranging sideways here, you don't really have the big spike in delta. You just have, at the tail end of this, grinding downtrend with some little bearish divergences forming, showing there's at least some limit selling pressure coming in as price sells off. But if we go through this entire uptrend, these spikes in delta, this buying pressure, it typically isn't ending well for these. Like essentially you have any little spike in delta, and those longs are getting punished pretty aggressively. It's a little bit of a bearish divergence. Again, this is just to put this into context. And the context here is not to say what will happen with price. It's just to say what I'm looking at. So here, 33 million, 15 million, 14 million, 15 million, 47 million, 29 million. So we're getting a sense of the numbers, 15, 20, 30, 40 in a 5-minute candle. We see the delta increasing, get a big sell-off. Here, this is actually a pretty significant local bearish divergence forming. You see, as price is grinding down, some longs are trying to open into this downtrend, getting completely shut down by limit selling. You get the bearish divergence, spike in delta and a big sell-off. Into this downtrend, you get the same thing. Every spike in delta is getting absorbed, price making a lower high, CVD making a higher high, you get another sell-off. And so I'm gonna zoom out in a second. But it's not to say, like here, we have a spike in delta, price carries a little bit higher, get a sell-off, but here another bearish divergence with some increasing delta, price making a lower high, another sell-off. And the great thing about this looking at these lines is you can get a sense of the magnitude of the aggressive buyers. So like this is frankly some really aggressive buying. This is quite aggressive buying, but you could say it's not really a bearish divergence in terms of price, because price is making a higher high, CBD is making still a lower high. You just see the aggressive buyers come in, right? So it's just relatively aggressive buyers, and then you see a bunch of aggressive selling into this, right? So I guess one way to put it is local highs and major highs are usually associated with aggressive buying. Sometimes aggressive buyers do okay, but it's actually quite rare. Like here's a case where you have the aggressive buyers here, and yes, price carries a little bit higher, but the buyers are still punished, because are these 85 million positive delta longs really just trading from 98K to 98,500? No, they're above water for a little bit, and then they get completely crushed. Again, here, really aggressive buying into this local price action. Bearish divergences, price sells off and punishes them. And we can just carry on, right? There's going to be some cases here, we should look at those, where you have aggressive buyers that aren't punished by price. Like here, you have really aggressive buying, and price doesn't make a new low. Here, you have really aggressive buying, and price doesn't really make a new low, but they just punish themselves, which is to say that for the one time in all these examples that the aggressive buying doesn't relate to a big sell-off, they just sell off at break even or slight loss or slight win anyways, and then you have a big local bullish divergence form showing that they're selling off aggressively and price isn't breaking down, and then price just keeps carrying higher. So that's the thing, that the context is so important, because whoa, this is a lot of aggressive buying, and then a lot of it just sells off into the uptrend without really price doing a whole lot. And then here you have a lot of it selling off, even though prices just carries higher, selling off. So a lot of aggressive selling into the uptrend, and the bearish divergence kind of just gets neutralized by like a choppy uptrend or a choppy range. And then right at the tail end of this uptrend, you have some aggressive buying, aggressive selling, aggressive buying, aggressive selling. I want to look at just a couple more examples of this, because I know there's some big bearish divergences that form here, because this would be synonymous to what we're looking at right now, in my view, something like this. You have price breaking down, ranging a little bit, impulsing to make maybe a new high. You have some highs here that look kind of nice. And all of a sudden you start seeing quite large local bearish divergences forming. A little impulse to the upside here, and then a big sell-off and continued downtrend. Here you have some local highs, some aggressive buying, not actually a bearish divergence here, just aggressive buying, sell-off. And the reason I think this is actually important for me to go over, again, this is actually a very large local bearish divergence. You see all this aggressive buying coming in here. You see CBDs making a new relative high, yellow line to yellow line, price making a much lower high. You see the magnitude of the aggressive buying as a line. You can also zoom in. The line is just saying 44 million, 30 million, and then a big sell-off. So this is the magnitude. This is the magnitude of this. This is a bigger bear. This is this is more positive delta than the Trump pump in magnitude, right? So here we're looking at, in this whole move, like 94 million in a 5-minute candle, a positive delta of mostly shorts closing, decreasing open interest at market. Then 64 million, 70 million in this candle, 79 million here, 97 million here. So if we zoom out, we can kind of get a sense of the scale of this pump. it doesn't even really create a bearish divergence. It's just really aggressive longing, some aggressive selling, aggressive longing, some aggressive selling, aggressive longing. What we're seeing here, at least on Bybit, is to scale, it's more aggressive. This is more aggressive, and this is potentially, to me, more bearish. 36 million, 60 million, 45 million, 13, 11, 23 million, 31 million, 17 million, 43 million, 65 million, 49 million, 37 million, 18, 7, 5. Gets really aggressive here. 4.4. Let's go up a little bit so we can see where we are on price. 18, 11, 20 million. So you can see when I say that local highs and major highs are usually marked with aggressive buying, like we can see as soon as the aggressive buyers really start coming in 18, 11, 20, that marks the highs before a pretty significant sell-off. 12 million, 3, 5.7, little local high here, sell-off. And then here, 12 million, 25 million, 18 million, 15, 73, 67 million, 41.5 million. Some of this is shorts closing aggressively, some of it's longs opening aggressively. 25 million, 35 million. A little bit of selling here. Some shorting right at this low. I saw this guy, I was like, oh, he's probably gonna get smoked locally. Shorted right at this local low, 11 million. But then here, another 8.2, 5.7, 3.3, 3.2, 6.8, 17.8 million, 23 million, 16 million, 22 million. So CVD is basically saying the cumulative delta here is piling up, Lots of aggressive buying. So that's why we see CVD going essentially straight up. And the bearish divergence is just to say that, well, there's a lot of aggressive buying here. CVD is making new highs, prices kind of making lower highs. Should I maybe be concerned here if I'm long and maybe be looking for shorts? Well, that's only if you think the data matters, right? Like I've had people, when I've talked about some of this on live streams, they'll comment something like, why do you think that these aggressive buyers are going to get punished? What if they know something you don't and they're just buying? And of course, right? Like I could just say, I mean, has there ever been a bearish divergence or lots of aggressive buyers that didn't really seem to get punished? Yes. But if I don't know the minds of the people, I don't know that they know something I don't, all I'm doing is saying, are these types of occurrences statistically relevant, right? So like if I'm going to trade for the next 10 years, and there's something that's statistically relevant. So let's just say a bunch of aggressive buyers coming in usually get punished. Not always, but usually. And I have two choices. I can take 1,000 trades based on the idea of what if this is the exception? And what if this time there's just something they know that I don't? Okay, that's not going to end very well. Like there's always going to be a chance that the thing that is statistically relevant or typically happens doesn't happen. But I'm not taking one trade off of an exception. I have to take thousands of trades off of the types of things that are usually statistically relevant. So that's why I would just say, to me, this looks like the type of thing that can end quite bearishly. And I think there's nice ideas for lower. I think there's structurally bearish ideas. And so, yeah, I mean, I'm kind of interested in shorting around this. And the worst case scenario is I'm going to take stops. And the best case scenario is it's going to play out, right? But you have to understand, like, it's not a prediction. It doesn't really matter. Like if you say, let's just say like we come into the New York Open, which is in an hour, which I want to stay long until stay live until. If we have 300 million longs open between now and the New York Open, prices carrying up here, CBD is going straight up, I have two choices, right? I can just, like, you don't need to know what's going to happen. You just want to know what's happening. And I could say, there is a shit ton of longs opening here. There's at market. There's some ones taking the other side of those trades because you can't open a long, you can't buy without someone selling. You can't sell without someone buying. And now these longs are actually starting to get put underwater. And what usually happens when these really aggressive longs get put underwater? Well, they've filled other positions. They've filled, in this case, probably short positions and let people get out of longs with limit closes. And of course, you could be, the only reason for me not to short that would be to be driven by fear. And the fear would be, okay, there's two ways I could go. Fear of missing out and fear of taking a stop loss. I could start thinking, well, what if this is it? What if this is like Trump and all his billionaire friends, they know they're about to announce the thing today, so everyone's buying really aggressively because they know, and like, I don't want to just take a stop loss here. Like, you start thinking like that, right? And it's like, but if you go down that road with your trading, and you're always looking to trade the exception to the rule, then you're not gonna be a very successful trader, right? You basically just say, and if I like using poker analogies because there's so many poker parallels to trading, but it's like you're playing poker and you have the second nuts and the guy's been calling you down and you think he's bluffing, nothing beats you, and then he potentially hit the nuts in the end, the last card, and he makes a small bet, and you could either push him all in because you're like, there's no way he has this. How would he be chasing this? The odds of hitting it were so, and he actually hit it. But not only are you not willing to raise him a little bit or a lot, put him all in, you think he's bluffing, maybe let him re-raise you or whatever it is, you're not even willing to call the small bet. You start thinking, oh my God, he's hit it. And the pot's already full. You need to call a small bet just to understand, to know for certain, does he have this or does he not? The odds are so small, it doesn't even make any sense. But you're just saying, you know what? I think he hit it. I'm not even willing to take a small bet here. I'm not even willing to call a small bet. Even if my pot odds are astronomical and whatever. So that's kind of what you can get into poker here. Sort of like, it's not to say that, okay, it's time to bet the house that price is going to reject off of this and I'm willing to risk it all. But it is to say, am I willing to take a small bet? Am I willing to place a small bet on and take some trades here on this idea? Yeah. If they know something I don't, and this is the exception and whatever, then I'm just going to take a loss, right? And then I'm going to go back to trading the same way I always trade. I'm not going to start saying, oh, see, I should have thought that maybe this is the exception and whatever. I am seeing this. I've saw it the other, obviously, right before the Trump pump, but there's that hyper liquid guy that I see posts like every time he opens a position, like he's opening another position. I'm wondering if the market's reacting, like if people are positioning themselves ahead of news and ahead of trading days based on that type of information, thinking this guy might know something that nobody else does. That's good to know. Someone says, I'm one of Trump's billionaire friends, and we are totally not doing that. Pinky promise. The only thing that I would say here is, I would say typically Binance, like as I've been watching it, Binance aggressive buyers getting punished quite what's the word? Regularly as well. But the order flow here is very different for Binance. Actually, this is kind of our first, oh my God, okay, so this is Give me a second, boys and girls. This is an hour before the New York Open. I mean, this is the type of thing that I'm looking to fade. So here we see 120 million, 116 million. We're going to wait. $50 million, 24 million. It's very likely I'm shorting here. I am short. I've taken a small short here. I'll explain. I think price can maybe carry a little bit higher, but I'm going to take on a bit of risk here. I might have to close this, but this is just a type of pump that can resolve quite quickly bearishly. And these next highs can come pretty quick. But this is the type of pump I'm willing to short aggressively. Come up and tag these highs. Binance did not have a lot of aggressive longing at all. Not a bearish divergence here, but really aggressive longing into this. Sitting at 160 million positive delta here. If we go over to the trading view chart, we're basically looking at this. I mean, it's a potential SR flip. We take this high. We are an hour before the open, but again, it's just, this is the relevant thing for this idea. If price does break out of this, I mean, these highs probably are coming, and I might have to look to trade that separately. I'm willing to short this aggressively and just see what happens here. All right, so we're probably going to see, well, we're going to see something interesting happen here. So there's a lot of volume here, and we have an increase in open interest. So risk is coming into the market. This is on Binance. It's not as interesting on Bybit. Let's look at Binance just because it's a little more exciting with the delta and the volume, but we've been seeing aggressive buying up here this whole way up on Bybit. So there's 1.22 billion volume in this 5-minute candle, apparently. In this, there was 120 million, 22.8 million in positive delta. And an increase in open interest means, oh shit, I should update this in the Discord. I always forget to update when I am live. That means positions are opening, right? A decrease, essentially, increase in open interest means positions net opening. Decrease means net closing, and that means that there's going to be limit positions opening. So let's say open interest goes straight up. It'd be interesting to get in the 1 minute candle here because we can see the delta in this candle's changed from like 160, 170 million, whatever it was, peaked at, to 108 million. And we saw a spike in positive delta and now a wick. That means a lot of aggressive longs opened, but like 60 million of them closed. And if we go to the 1 minute chart, we'll see some of that because that can be a little bit relevant. But anyway, so if it was just a decrease in open interest, that's going to mean like limit longs taking profit and shorts closing, right? So it's like positions closing, shorts closing with stop losses, and longs closing with limit closes, and that's kind of the transaction that's going on there. Generally, there's going to be a bit of everything, but just the net increase or decrease in open interest and delta and whatever. If it's an increase in open interest, that's net risk coming on. So you could say, although there's going to be a mix of everything, although there's going to be a mix of everything, the kind of net way to look at that candle is it's going to be aggressive longs opening at market and probably some shorts opening. So we're got the 1 minute candles now. So this is probably going to be kind of interesting. I mean, for all the reasons I described, I'm happy to get stopped out here. I'm probably even happy to reshort higher and even stop out, reopen. Like I'll be cautious here because, again, anything's possible. But this is short setup territory for me. The only thing that's kind of missing here is that the New York Open's not for an hour, but that's all right. So like think about here on Binance, of all the places that really aggressive longs wanted to open, we can see it in the CVD, obviously into some of this breakout trending price action, lots of aggressive longs opening here. Of all the places that longs really want to start opening aggressively, it's at the highs of this range. I mean, that's where people maybe whatever bearish bias they had, whatever they're waiting for sidelined, it's like, okay, we're breaking out, this is it, I'm going to miss the entire move, something like that. And so we see this massive, in this 1 minute candle, this massive increase in positive delta, $125 million of longs opening in a 1 minute candle, open interest increasing. And at the same time, there's people sitting here, they're not reacting necessarily, although they could be a little bit, with limit shorts. And they're filling limit shorts with all of this market buying liquidity. It's kind of just interesting to think about, right? Because right now, who is more likely to get punished? People opening the most aggressive longs that you're seeing right here in this whole move, some of the most aggressive longing right here, or the people filling limit shorts here for the same value. Yeah. Statistically, probably these guys are going to get smoked. Like, this is the type of move that could literally has a decent chance of being the high before 68K. Although I am starting to lean towards, I talked about a little bit earlier in the live stream, like establishing this high. This is like a nice clean SR flip. We've taken this high and this potentially developing into a range. And we come and take these highs one more time before 68K. This becoming our future GP. That's probably what I'm going to be looking for. But a short like this, in my view, probably gets held in a lot of cases down into these lows. But you got to watch some of this too. We'll see. We'll see what happens into the New York Open. Now, there's going to be a lot of people here. Yeah, I opened my short already. I said I'm short. There's going to be a lot of people here that are maybe they've never seen anything like what I'm describing, and they're like, how the hell are you shorting this? Like are you insane? Like, it's whatever. Price is finally breaking out. They're probably thinking, this is the long. This is it. Like, everyone's been saying on Twitter, the bottom's in. That's not how I trade. I would rather probably just be taking stops on shorts here than not shorting this. It's just like, yes, price eventually will break out, and you're gonna get stopped out of shorts like this, like shorting the aggressive big high delta candle sweep of all the highs. But it's just like, are you always looking for this long? Like, this is your long? Actually, I think this is just a line I drew. It's like longing this, just like this is your long. This is your strategy as a trader. And I don't really think that's probably very smart. You can basically pick an impulse and it retraces. Now, that said, price can push higher here. That's the reason I'm shorting it. And I kind of explained the mechanics of the idea from an order flow perspective, but price can carry higher. There's kind of a nice level above. New York Open, not here yet. Something else that and you just have to be willing to, in my view, just take stops on shorts like this. I mean, if it's a stop, it's a stop. What else are you really waiting for to short? But that said, there's a nice level up here. If we can push up higher today through the New York Open, take these highs. Now, someone might say, okay, if you think that you think it's likely that no matter what, 68K is coming, which isn't really how I would describe my position, but I'd say it's, it's an okay way to describe how I think it's likely, even if this high comes and if it doesn't. Why would you ever stop out a short here? Like, say price goes 5%, why wouldn't you just hold this short and add to this short? If you're positioned that way, in terms of sizing, where you're saying, I'm going to put a bid on here and I'll add here, I think that's fine. I'd rather just trade the levels independently, because I don't know what's going to happen up here. Like, let's just say that price breaks out of here, and I'm like, okay, if we don't, I'm going to close my short. If we can't break back below this, I'll wait for higher. I don't know what's going to happen here. I'm not going to pretend I do. I would take the short if this happens, but I would just wait if this happens. And so I'd just rather trade that level independently than commit to sitting in a short through all of this and just hoping this, because what if this? And then all of a sudden it's like, oh, I was completely wrong. And why not just take this trade independently in this case, is my view here. So. But I think it's kind of interesting. It's a good opportunity to kind of see what's sort of happening at a key level, which is, again, just a big increase in delta, tons of volume, lots of aggressive positions opening right up at the highs, price rejecting, at least reacting to some of that, get a little bit of a pullback. We obviously see some of those positions closing, and then on the first little bounce, we see pretty significant longs open here, 31 million in this 1 minute candle, aggressive longs, increase in open interest. So that's a pretty big delta in this candle. See some aggressive closing as another reaction to the downside. Again, see aggressive longs opening. So there are still people after this. There's still a lot of liquidity built up beneath, and there's still people chasing every pullback, a little reaction, chasing for a bigger pump, building up more liquidity, more shorts opening at limit into the aggressive market buying. And so it's just kind of interesting to see the behavior here. I would say that there's probably, as far as local price action goes, there's probably a decent chance that we come up and retest these highs or sweep them into the New York Open, unless we just nuke everything here. But you're going to typically be getting really punished longing this 1 minute candle based on the type of delta in it. And we could even say, you know, not all 1 minute, or let's go to the 5 minute, not all local pumps are created the same, because we could go to the chump pump and say, well, had you long this, you would have done well, and that is true. Surprisingly, delta in these delta I'm sorry, delta and volume in this wasn't crazy, but here it looked kind of spooky. But then you just had a shit ton of oh, I'm not on the right. Here you had this is the Trump pump. It did look kind of spooky, but then you had a huge sell-off here, 93 million, 48 million, and it kind of resolved really quickly. This is aggressive shorts opening, right? So we might see something like this today, and this could be something to look out for, to say, hey, let's watch out here. Because after the initial 5 minute candle on the Trump pump, this is the Trump pump, you see people going to fade it. 93 million in a 5 minute candle of negative delta, increasing open interest, so aggressive shorts opening into limit longs. It's the inverse of what we're seeing now. And then some of these initial longs closing, and then price carries higher. This is net negative open interest decrease, so there's going to be a lot of shorts getting stopped out here. Some more aggressive longing, some more aggressive selling. It's going to be interesting to see what happens locally here towards the New York Open. Somebody said, wait, I'm just trying, I want to catch up with, I'm not understanding it. Someone says, this short, how can you execute only with limits? Where do you put the stop loss? Market impossible occurred in less than, I market enter, I don't. What are you talking about, dude? Wait. Guys, what are you talking about? Okay, so he says, I'm just all right. What are you talking about? Okay, I gotta kind of explain this. I just want to make sure I understand what he's saying. Okay, so somebody's saying, this short, how can you execute only with limits? I wouldn't. I would just market order into it. Where do you put the stop loss? Market impossible occurred in less than 1 minute. I mean, he said that's absurd. It can go. Oh, somebody said you don't need a stop loss. You could just manually close it with a market order. He said that's absurd. Price can instantly go to 87,000. Yeah, so that, no. I mean, that's not how this ever plays out, frankly. Like, I mean, it could technically go instantly to 87K, but that's not typically how this move is going to happen. So let's just say we have an established high here. The whole idea of running these highs and trapping a bunch of longs is that people are trading a breakout, right? Like, you could say the same thing, like, how do you short this? How do you long it? How do you do anything? Where's your stop if you long it? Price could just instantly reject and go straight back down. We see that all the time, right? When price is coming up to take this high, to wick through this high, you say it happened in less than 1 minute. kind of. I mean, it happened like you have like 3 minutes, 4 minutes. You see the big high delta wick. You see price reacting, starting to come back below the high. You take that short in here. Where's your stop? Where do you size for? Where's your stop loss? Well, the wick high is 0.6% away. So, like, let's say you're even willing to let it run as a hard stop up to 2%, 1.5% against you. You put on the trade, and then you just see what happens here. If price rejects, and you have a hard stop up here, you might even be willing to soft stop it sooner, or give your hard stop a little bit of a wiggle room, depending on what you want to do. But to pretend that there's no time to execute a trade here, if you're sitting and watching order flow, if you're sitting and watching these highs, and you're just asking yourself, am I willing to put on some risk and short this? And you just take the short. I mean, is the fear that you take the short and then price instantly goes to 87K in 1 second? That's probably not happening, but it could happen in like 40 seconds, 30 seconds. Like price could start coming up and you just say, okay, I'm going to close it, right? It's just like, okay, price is not just rejecting back below these highs, limit orders getting absorbed. So you just close it. You might take a small loss, but are you sized to lose a lot of money here? No. You're just fading this. I wouldn't say, like, let's go to the 5-second chart. Like the shorts in here. 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, 55, 60, 65, 70. 1.5 minutes here, some aggressive longs opening, getting shut down. If you don't think there's any way to take a short here around these highs, there's not enough time, there's no way to manage your risk, I really don't know what you're talking about actually. You have to be thinking of like a 1 in 1,000 scenario as like what's going to happen here. If you're sitting here and you don't have any, okay, yeah, that's fine. He says, I don't trade very low time frame. I'm just trying new things with dust. That's why I'm asking. Well, if you're trading low, I mean, this isn't actually low time frame in the sense of the structure, the ideas, the levels. It's just the moves come quick, right? Like if we go to some of these moves, price can go up and down really quick. Like the high comes and the high goes, and maybe get some consolidation and a sell off. But like shorting the wick or longing the low or whatever, yeah, you're having to execute that trade immediately if you want to catch the sweep of the level, more or less. I mean, here you could just say you could enter here, the retest, however you want to trade it. You don't have to, but you might just miss the scenario where it just goes straight up and straight down, which does happen. But what was I saying? But yeah, I mean, this is just sort of like, if you're trading around this type of level, it's sort of the speed of the trade. I mean, I'd say you probably have somewhere in the vicinity on the really aggressive moves 1 to 2 minutes to make a decision. And in probably the more probable case, you have 10, 15 minutes. Maybe 5 to 15 minutes to trade around the level and make a decision. And that could also go with closing the trade, right? Like if you see the inverse of everything you want to see for your short, which is instead of more longs opening aggressively and getting absorbed, you see really aggressive shorts opening, getting absorbed, then you might just close because like, okay, well, all these positions I thought were going to get trapped or closing, and yes, we could go lower, but I don't like it as much anymore. But I think one thing to understand with a short like this is that you might be executing it on like the low time frame, high delta volatility there, all the longs opening, and you're just like, I'm taking a short, but you're not sitting here on the 15-second chart saying like, if price goes up to here, I got to close my short. Like, you're giving this all kind of room to play out. The whole idea is just, okay, a bunch of aggressive longs, starting to get trapped, seeing the reaction, just getting short, and then now see what happens here. I mean, if you're wanting to play a hard stop here, it's probably a little bit above this level, and you're probably fine most of the time here into the New York Open. But now the scenario of like this can play out kind of slowly. You come and tag these highs again. And this is probably oftentimes the easier short. You just don't always get it. But kind of for me, just everything in here is a short at this point. And this is where I start to get a little worried about this high getting tested. We have New York Open in 35 minutes. And we're going to start building up some ranging scenarios here, it looks like. We'll see. Right now, we have a technical rejection. Nice little SR level here. Sweep of this. This previous high holding as resistance has been kind of retested. But we'll see what happens to New York Open. I think it's kind of prudent, like I said, if you're trading a level like this, you're kind of targeting these lows. And I really don't mind the idea of this becoming a range. Maybe looking for longs here, shorts back here. But if obviously I could get a stop on a long here and still like the idea of 68K. I think that's the primary idea I'm trading towards, but I'd be willing to maybe trade this as a range. All right, so let's go to order flow really quick. Again, low time frame. Oh, it actually just resolved really quick. It's resolving kind of quickly. But we have a little bit of a bearish divergence forming here on Binance. So we have the initial high, we have all the trap longs. So one thing to consider, like if you infer that across many exchanges, but here, you know, huge limit shorts have opened up because you have the increasing open interest, positive delta, so there's a seller on the other side of the aggressive buyers. Those shorts haven't closed. There's no way for them to have closed. There's not enough liquidity, right, for them to have closed. So the limit sellers here are doing one of two things. Well, they want to win, right? Whether they're going to get stopped out higher, keep shorting higher, or drive price lower. At some point, the limit sellers here are motivated to get these short positions into profit, into enough liquidity to close, right? That's their motivation. So we can start to look at, is there any evidence that they're willing to keep pushing price down? So something like that would be like here, a little minor, you call it a bearish divergence, but it's just to say that here a bunch of limit shorts fill into aggressive market longs. Here another 31 million of buying in this 1 minute candle, aggressive buying, and more limit selling. So just pushing price down, filling short positions. Here again, filling more, open interest increasing, open interest increasing, open interest increasing. But here we saw a little aggressive sell-off here, a market close. So some of this is probably going to literally be these positions that just opened here, closing here, on this little pullback. So they long aggressively, just close aggressively. But we're starting to get when I say a bearish divergence, all I'm saying is on this low time frame, after we've established this high, we're seeing a net increase in positive delta. And that can be determined by the fact that the line is higher here than it is here. Now, does that just mean, oh, price is going to go down? No, it's just a way of describing that delta is increasing. So it's gone from 108 negative million delta here, 87 million negative delta here, to 72 million negative delta here. So it's something like from this candle, 30 million, from this candle, 20 million, more aggressive longs opening, And there's limit sellers here relative to price. That's all it means. What won't these limit sellers like? Well, they might not mind price pushing up a little higher and filling bigger short positions. They won't like price breaking out and squeezing them out and stopping them out of their short positions. That would be contrary to probably their goals with these positions. Although there are some cases where they would just keep filling shorts all the way up to those other highs and willing just to, the more the merrier. So something that's kind of interesting about order flow here is, let's think about it as just people making decisions in some broad sense. You have people putting on trades. You have buyers, you have sellers, market buyers, market sellers, limit buyers, limit sellers. And so let's just say, just to make it simple, the limit seller is one person and the market buyer is one person. Of course, that's not the case. So there's a big limit seller sitting here, wants to fill a bunch of short positions at the highs of the range. And they have, you know, $500 million that they're willing to invest in this level, let's say. Like they're just filling, they're saying, okay, great. You know, oh, I'm building a huge short position and I'm gonna keep driving price down and wipe out all these long positions. I'm gonna use them as liquidity to unload my long or my short. And so they're just happy with whatever they can get filled with here. They don't know, but they don't know, right? Like you can't just, if you're this limit seller, you could say, I would love to have a $500 million short here, but I can't open a short beyond what anyone's willing to fill me, right? So whatever I can get here, I'm happy with. I would love to get 500 million. I don't think that's probably going to be the case. You know, I've already filled 100 million, 150 million, 200 million. Okay, and maybe they're saying here, like, I'm just painting a scenario of the dynamics of the market. They have no idea how many people are willing to long up here, because they can't know. A market long is just, you click the button, market long, right? Like, there's people in the chat, Frank, Mente, Rake, Sitsozen, Javier. Are you guys willing to market long here? How much are you willing to put on? Like, if I'm this short seller and I want to fill my short positions, I'm advertising this. I'm saying, hey, will you buy? Will you buy? Will you buy? Come on, fill me. If no one wants to long here, it's like a dud, right? It's like, okay, well, what? I got filled. You know, I wanted 500 million. I got filled for 10 million. Nobody was willing to long here. If you're the big seller, you want buyers here. You're not afraid, like, oh no, somebody market bought $100 million here. You're like, oh, fuck yeah, great. I didn't think I was gonna get, I didn't think, you know, the market buyer here was gonna put in 100 million. That's great. What else are they willing to put on? 31 million, awesome. 17 million, 20, great, I'm getting filled. They're not sitting here necessarily saying, I want price to go straight down, I'm scared, because they're not even filled yet. They want to get filled. I'm not saying that's what's happening here. I'm just saying that's the dynamic of order flow in a sense. And do they have an incentive to just drive price straight down and get their position out from being underwater? No, not until they're filled. They don't want price to break down. They're not trying to push price down through these lows. They're trying to get filled. And where are people willing to long aggressively? At the highs. I mean, it's just, we went over it on order flow. This is where they can get filled. They can't get filled on shorts down here. There's not enough liquidity. This is where everyone's selling. They need people buying. So this is the type of place where people are going to buy. But what can happen? So let's just say that they're sitting here and they're just filling their shorts, and they're like, "This is great. This is great. You know, I'm almost at 500 million. Let's just say price keeps ranging here. We make wick through the highs. Another 200 million comes in, whatever it is, and then all of a sudden they're completely filled, and they're like, "Okay, I can't open up any more shorts. And now I'm just, you know, I've absorbed all this buying. Let's send it back. Let's get it back down." And they just get overwhelmed, right? And they can't hold down price. They can't absorb all the buying. And then all of a sudden they're like, oh shit, I need to get out of this short. because I can't control what's happening here in price anymore. It's getting away from me, and they might be sized to. We don't know what they're like. They might be sitting here saying, "I'm willing to absorb, 200 million here and another 200 million up here, whatever it is." It could be something like that, and then they want to trade down to 68K. But I'm just giving you the dynamics here of these big positions aren't like us. They can't. You can't. You could go on to any of these exchanges and open. You just go boop $1 million. I'm long $1 million. I'm short $1 million. Click a button and you're in that market, and you're just gonna get filled, and it isn't that difficult. You cannot do that with a $200 million or $300 million position. You need time to fill it, and you need major liquidity, major levels. Because if you could have spent a long time trying to fill a $200 million position here, for example. If you woke up today as a trader with that size, said, I want a big short position. I want a big short position. You need people to buy. You can't just open it. You need people to market buy into your limit sell position. And you could have sat here for 20 minutes and be like, okay, I'm not getting filled on anything. I need price to go higher. I need aggressive longing to fill my short position. And so you might even be incentivized to help, definitely not to suppress this if you want to short, but to even maybe help it along. And now you're like, finally, I can fill my short position. But so I mean, there can be multiple people battling here with different intentions. And you might have even accumulated some long positions here that kind of help press price up, and you're maybe having to unload the longs as well. And there could be now a bigger whale who's like, I want short positions too, but I slept in and I wasn't going to trade towards the New York Open. So whoever this guy was is filling his shorts. I'm going to squeeze him out, and I'm going to use his liquidity to fill my shorts higher because he already took it all. Why does he get the $200 million short and I have to sit here? No, I'm gonna put him underwater and squeeze him out. Like, that is the type of dynamic that could be at play, but we're seeing probably someone filling some pretty large short positions, or multiple people, I would say. This is a bearish divergence locally. It's not super significant, but it's just to note it's there. And let's see what's happening here. I'm gonna go to 1 minute on Bybit. Bybit's actually, like, it's funny because Bybit saw a lot of aggressive buying down here. Binance didn't. It saw actually more aggressive selling. And then the aggressive buying isn't really taking place up at the highs. Like, Bybit's kind of like, this doesn't look like there's actually a whole lot going on here with Bybit. There's actually some aggressive selling into this range. Certainly forming a range up here. There's no doubt about that. It's just kind of going to be a question of if we retest and just break down, or break out, or sweep the high again to the New York Open in 20 minutes. But hey, this really aligns with if you watch my backtesting video on Wednesdays, this type of move, and maybe we do push up to that other high at 87K, but essentially it's like, hey, we do a lot of pump and dumps on Wednesdays. Like, what are the levels? Essentially the premise of that backtesting video, that's available in the public Discord, by the way, is basically setting up on Wednesdays that you want to short. What are the types of levels you're looking to short? And some days you might have 2 levels you're willing to short. This looks like a prime candidate for a Wednesday short. Let's turn on Wednesdays here. I'm just kind of almost trying to imagine that I'm backtesting this day just for fun based on that video. So it's kind of like, okay, it's Wednesday, you have a Monday high, an SR flip. If you're looking to short aggressively on a on a Wednesday, there's a trend line here too, by the way. If you're willing to short aggressively, I mean, you're shorting this. You're shorting this SR flip, and like, I'm speaking to the people who actually watched that video. It's about an hour long. And I would probably be saying, and if you didn't, you should have. Right? So I basically said, like, where are the shorts on a Wednesday and some of the more aggressive shorts? And this is one of the more aggressive shorts. The SR flip, take the local high. Yeah, you're going to be a little wary because you just swept this major low. There's these highs up here, maybe this trend line. Probably just want to look to short both, and if you get stopped out of both, you get stopped out of both. But if you're looking to aggressively short a Wednesday, then why aren't you shorting this? And I'm not saying that today. If you watch the video, you'll know I went over 500 days of Wednesdays, over 70 Wednesdays, and every single Wednesday on the 1 hour chart, and just basically said, what is the result had you just looked for shorts on every Wednesday? There's Wednesdays where you're getting stopped out. I think it's actually a pretty nice day to look for the aggressive short setups. But I went through all the statistics on that live stream. So I'm sorry, on that video, so you can look at it. But I think this kind of falls in line with the Wednesday statistics. Like, how can you not short this? Don't be a scaredy cat. Late Nights Flying Kite says, thank you for your insights. Really enjoy the analysis watching from Australia. Well, welcome from Australia. Somebody's giving the CPI numbers. New York opens in 35 minutes. CPI, it actually opens in like 18 minutes now. CPI came in at 2.8% versus projected 2.9%. I don't really, I know CPI, like the way I think about things like CPI numbers is it produces some volatility. I don't really trade around like the results. I don't really care. Someone says, you do not take macro eco data into account. No. I mean, let's think about like this. So like, here's like the technical idea. It's a trend line and it's a SR flip. And why do those ideas matter to me? It's like the order flow concepts is they seem to be statistically relevant, right? Like if I'm sitting here and I'm saying, like, for all the reasons that I could be wanting to short, let's say I have technical ideas, bias, whatever it is, for all the reasons I could be wanting to short, and I think 68K is coming, I can use some, like, how does price typically move? I can use some of those ideas through literally tens of thousands of hours of chart time and hundreds of years of back testing and all that stuff to understand, like, these are the types of places where you kind of get the most bang for your buck out of a short. I don't want to be shorting here. I mean, I don't want to be shorting here. I want to be shorting here. I took profits here. I got stopped out of a half-hour short here. But it's like I'm kind of aware, like, this is an SR flip, trend line, blah, 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 blah. Looks kind of good for a continuation of the downside. And then I kind of have the order flow confluence here, which when we talk about like the macroeconomic data, can the market react to it? Like numbers come in better, number come in worse. Yeah, it can create some volatility, but at the end of the day, like you have 150 million or hundreds of millions of dollars of aggressive longs opening, getting absorbed. You know, you have some technical confluence, you have whatever. It's like, is the macroeconomic idea going to, like, is that what's going to dictate who wins here? That these positions are going to win because, like, of the CPI numbers, that they just opened up $150 million on the 1 minute candle? And is that how, so like, let's put it this way. why should I give a fuck about that type of data if nobody else makes trading decisions based off of it? Like, they could think they are. It's like, oh, the CPI numbers are out. Oh, I'm going to open a $200 million long at market here on this 1 minute candle. It's like, what does that have to do with, like, why do you, but I'm going to close it if we go down 2%. It's like, I'd be more interested to see what people are doing. And they could think, like, I talk to people who trade, like, news data, and they'll be just like, let me close all this. Like, it's like dumbfounded and shocked. And it's not that I blame them, I understand, but it's like, what the fuck is happening? You know, earnings came out better than expected. That was the big thing, and price just went straight down. Well, yeah, everybody, what's going to happen if tons of aggressive longs open up here and somebody can make money by just liquidating them? Is it the news event that's going to save them from the fact that somebody's targeting them? No. And it's sort of like the Trump pump, right? It's like, people blame, you can blame Trump for the volatility. It's like, oh, Trump manipulated the market, and for all Trump knows, he thinks he's doing something good. He's like, I'm just telling, like, good for crypto. I'm just telling you guys good news. I don't know why the market's dumping. Do you think it has to do with just really over leveraged positions opening into this, thinking this is it, this is the big news event, and then they get targeted and liquidated because somebody wants their money in the market? It really, like, they did it to themselves, right? This happened. A news event happened. They over leverage into positions, thinking this is it, it's going to happen, and then they get liquidated. They created this entire scenario. It's nothing to do with Trump. It has to do with their reaction to Trump, right? Like, Trump says, I love Bitcoin. We're going to make a crypto reserve. Everybody get long, hundreds of millions of dollars. And then you're shocked when price goes down and liquidates you. Well, what happens here? Like, these guys, whoever's opening this position, is like, what the fuck? Price is going straight up, and maybe they're trading a news event, whatever it is. They're making this happen. They created this moment where they opened all these longs, and now they're going to get liquidated. I'm not saying they will, but I'm just saying it's most likely. And it's like, yeah, I would rather just fade them. I'm not even going to look at the news because I don't care, because that's not what moves price. The news doesn't move price. People's reactions to news. I really have, like I talk about fundamentals a lot in kind of a disparaging way, which is like, it's like when I say I'm a technical trader, or I'm just looking at what's happening in order flow and technicals. I don't really care about the narratives, because it's not that I don't think there can be a fundamental catalyst for price, right? Like, if Trump announces and they actually enact something, and they're like, we're going to buy, $100 billion of Bitcoin every month for the next 20 years. That is fundamentally, that's going to drive price up. Is there going to be a lot of volatility? Like, if he announces that, are there going to be the 1 minute candle go straight up as people are trying to speculate and position themselves ahead of that and get super over leveraged, and then you're going to see 1 minute candles that look like this? Yeah. And people are going to say, what the fuck is price going down, because I thought this was bullish news? But it's like, they're just getting liquidated, and price might eventually go up, and that might be a fundamental driver for price. That's one element of it. It's kind of like the market overreacting, everybody trying to speculate on the news, and not really, but really they don't time frame the fundamental perspective appropriately in their head. So they're like, this is super bullish, but their time frame for it is the next 1 minute candle, and then price goes down. They say, what the fuck is happening? It's like, well, everybody that's just trying to speculate on it's getting liquidated, and it's not really that big of a surprise. And you'll see fundamental narratives change dramatically with price. Like, the most bullish thing yesterday is fundamentally, and it could be like a multi-year narrative that people have been talking about and developing for months and months, and saying, like, because of this fundamental factor and this and this and this, and then price goes down 5%, and it's all bearish now. All the fundamental bullish things are actually bearish things. And so what I would say about like there's fundamental drivers for price, but fundamental narratives are just so bad. They're so wrong. And they're so disconnected from the reality of price action. It's like, I'm bullish on Bitcoin, and I think I still think that the Trump kind of, let's call it the Trump presidency and some of the things they might do with crypto, it's probably going to be a fundamental driver for price going higher. That has nothing to do with whether I think 68K can come, and it might not be the case, right? But I think it probably more likely to be a fundamental driver. Do I think it's like people say, like, is it a good thing for crypto? Is it good that the governments are getting involved in this potential manipulation? I mean, from a moral perspective, I don't really know or care, right? I think I could see a perspective. I could see some scenarios happening where Trump, let's not talk about his motivations. Like, you can kind of create a story. You can kind of create a story around it if you want, but it's like, I'm bearish on the stock market. So people might say, like, how are you bearish on the stock market and bullish on crypto? Well, I'm bearish for technical reasons on the stock market. But if I wanted to build like a fundamental narrative around how the U.S. stock market could go down and crypto could go up significantly, and while the stock market goes down significantly, doesn't make new highs. I'm not saying this will happen. I'm just saying I could create the fundamental narrative for it, which is Trump's presidency is ultimately bad for the U.S. economy, is the fundamental narrative. It's like what people thought was going to be the golden age, and it's like the early talks of like the short-term pain for long-term gain. China thinks 100 years in the future. We need to start thinking like that. We're building a foundation. It's like, and there's some truth to that. Like, the U.S. economy is, I don't think price is going down because of Trump. I think price is going down. Yeah, could it be some kind of catalyst? I think it's just a narrative. It's like, to many of the people, that Trump's presidency was going to be the most bullish thing ever. It's now the most bearish thing ever, and he's ruining the economy. And they thought he was going to, for him to, but in reality, it's because this is your chart. Let's go to the monthly. You got to zoom out. This is the stock market. It looks like a shitcoin. I mean, it's literally just goes straight up. And the reality is, there's no way this can do this forever, right? Like, there was no story that ended like this forever. This is coming. It doesn't matter who's president, because everybody is long. Everybody's created the most bullish narratives ever just to justify just being more long, leverage long the top, buy more, buy every dip. It's like, and so everybody's long. What is going to happen? It's like these guys are all long here. It's just on a higher time frame. They're all going to get punished, right? All of the money that can be made and exploited in the market is down here at a certain point. I'm not even saying it has to be this move to the downside, but at some point, it doesn't matter if Trump does the most economically bullish thing or bearish thing, price is coming for you. If you thought this was going to go up straight up forever. That's my opinion on the stock market. So anyways, but if I want to build a fundamental narrative, it's just like Trump's kind of erratic economic and domestic policies where he's trying to gut the government, make it more efficient, is like dismantling important things. People are losing trust, or they're losing any kind of certainty in what the future of America looks like. All these trade wars, things like that. It's just so much uncertainty, and maybe there's some retaliatory trade war stuff from former economic allies, and it's just like, and now money's flooding out of the market. But in reality, like, whatever reason people need to justify that why they're selling all their stocks, it's like, I don't trust Trump anymore. A lot of people are just gonna be selling because this is happening, and they're underwater, they're break even, they're round tripping everything. This is my opinion. I'm not saying what is going to happen, but because there's going to be people here. I'm not trying to tell people what they should do with their investments and life savings. So, obviously, the S&P 500. I've talked about this. What I think is sort of like, it's just like, I think it's there's so much risk building up in here as people's retirements. S&P index fund contributions and how they're isolated in basically 5 or 6 companies. 40% of the S&P, 40%. But anyways, at some point, you're going to have a bunch of liberal retirees who have invested in the S&P for their entire lives. I actually want to set 2 alerts here. You're going to have a lot of I'm not talking about why the stock market's going down. I'm going to tell you what the fundamental narratives can be. It's just like, I'm cashing out my retirement. I'm cashing out my investments. I don't trust Trump. I think, but just really, no, there's a lot of people in long term, like I was talking about a story of, like, you have high school teachers retiring with $5 or $6 million because they invested a small portion of their, monthly check into the S&P index. It's like you have a lot of people that are going to start getting scared as prices coming down, and they have a narrative where Trump is ruining America. And so the selling pressure here could get immense, and it's just going to cascade in the bearish scenarios. And I honestly think, yes, we could range here, we could bounce, whatever. I just think it's kind of written that I think we're actually, and from an Elliott Wave perspective, I think we're at the end of like a 100-year cycle. I think we might have one of the most bearish stock market decades. Yeah, but again, what does that mean? I mean, you trade levels, trade ideas, dive some shorts on the stock market, yes. I'm just telling you what I think. I mean, price can go higher, and it's like, oh, I'm wrong. I could be wrong about this. I could be wrong about everything. But that said, so the fundamental narrative is that's happening. But in the meantime, as Trump, it's kind of like you could have the stock market plummeting because every major institutional investor and retail investor and everybody is just losing faith in Trump's ability to build a robust America. But at the same time, he's creating meme coins like Trump coin, and those are pumping, and he's positioning the U.S. to buy Bitcoin and Dogecoin and XRP and ADA, and yes, people could be losing complete faith. Again, I'm just giving my version of what a fundamental narrative could look like. It doesn't even need to happen. I'm just saying this, like people say, fundamentally, how could this happen? At the same time, so the end of America, from the eyes of the world onlooking over the next decade, I'm not saying it's truly the end, but I'm saying the economic despair and downturn, which I think is ultimately, fundamentally, we have to deal with all our debt, and a stock market can't go straight up forever, and this is all coming anyways. But what it looks like, the headline 10 years from now will be like, Trump became president, basically cratered the U.S., and completely deteriorated our position as an economic global superpower. Everybody lost all their faith. At the same time, started buying shit coins, Dogecoin, XRP, ADA, Bitcoin, buying cryptocurrencies with the U.S. dollar, and they all went straight up. And so basically, the end of America, I'm using hyperbolic language, looks like shit coins doing this while the stock market plummets because people are speculating on just the U.S. government buying stocks, what Trump's going to do, and not just speculating if it's ever realized, and it might not be. It's so easy for me to imagine that headline 10 years from now. It's like, oh yeah, the big collapse that comes, and the big multi-decade bear market that comes, and starts with a Trump presidency where shit coins are being bought by the government, and as the stock market collapses, and the Doge chart looks like this, and the stock market looks like this, and yeah. So, anyways, that's what I think it might look like. I'd be fine with that. If that doesn't happen, then I'm fine too. But if a recession does happen, do you think it will get a similar crash to 2008? I mean, it's really hard to say. Like, I, I, I I'm probably in the phase where, like, if I look at the Elliott wave ideas here, I think 50-60% is certainly on the table. But it's like, I mean, just from like, not even just Elliott wave, just from like every perspective. But when you start to come up with the really bearish ideas, you do have to just think like, is this even possible? Like, can we go back to the COVID low? And I guess my take here is that, yeah, it's possible. I mean, you have to deal with just like all the printing we've done, inflation, all these things. It's like, how do you adjust for this? Just from like a really basic perspective. Like in a major economic downturn and the end of, our version of the Great Depression. And it's good. So it's like, our 08, 56%, 55, 53, 54. Our .com, our COVID. Can we get back to the COVID lows? From Elliott wave perspective, we really should. It's like, why is this? I would say this, like, why is this crazier than this in people's heads? Why is it even crazier than this? Like, I forget the exact analysis, but it's like looking at like, how Nvidia is priced. Basically, for Nvidia to justify its price, it needs to grow at some like astronomical, like 35%. I forget the exact numbers. It's something like 35% a year for the next 10 years for it to justify its current price. If it only grows by 20% a year for the next 10 years, 20% a year, that's a lot. I mean, I think it's grown at like 28 or it's grown around 30% a year. It needs to continue that. If it grows at 25% a year, I think in 5 years the price and the value is based on growth and based on the same metrics, which it doesn't have to be. The price will be half of what it is today if it still keeps growing at 20% a year, which is insane. Like, that's how some of these companies are priced. So it's like, I don't know. I think COVID low can come, but it's just my opinion. New York opens here. Yeah, I mean, shit. All I can say is I'm kind of just looking for lower. Like, if this high doesn't hold and it doesn't hold, I mean, I can't really close my short here because why even take it? I'd be willing to round trip some of it. Maybe we come back and retest these highs. Maybe it breaks out. A little bit of selling into the open. Some aggressive long starting to come in here. These little local bearish divergences I was pointing out earlier, playing out kind of to new lows. Bybit Binance much the same as Bybit. Maybe a little local bearish div here on Binance, a local bearish div here on Bybit. Nothing crazy though. It's mostly shorts closing, some longs opening. I think a lot of potential to range into these highs in one scenario. So the things I'd be looking for here, personally, on these local time frames is, well, one, this holds. That's one short setup. And like I said, it's like, this is kind of hard to say, or hard to explain if you don't understand some other concepts. But like if you're in a short that looks like this, and your idea is to short this and ultimately trade it towards these lows, yes, so you're going to get stopped out some shorts. You get something like 10 to 1 on your risk here, depending on how you're trading it. How are you ever taking this trade and ever holding it to a target if you're ever closing it here? Yes, you might be in profits and then get stopped out and price goes higher, but the point is, if I take this trade 100 times and my goal is to always trade it to these lows, and I'm ever closing this trade here, and what I mean by this trade, I mean this kind of scenario, this setup, when will I ever hold the trade? How will I ever hold a trade down to here if I'm ever closing it here? If I could trade this 100 times and this is enough to close this trade, that price is kind of bouncing here, and what if we sweep the highs again, or what if we break out to these highs? It's like, yeah, that's certainly possible, and I'll probably have to reevaluate short positions and consider new setups. But it's like, then that's just is what it is. I mean, I'll never get my 10 to 1 on my risk if I am closing here. If I'm willing to maybe hold into this, and this is like willing to maybe TP and maybe look to add back on some kind of rally, and maybe I'm capturing a little bit of value there, or even not add back, just lock in TP1, that's a little different. You're at least capturing something out of that move. But anyways, that's my perspective. So the things I'd be looking at here, I'm either going to print this short deeper, because again, it's just on the time frame of this trade, I'm just never going to close it here, because this is the trade, right? It really doesn't even matter what happens here. It's just like, yeah, price might come back, retest the highs. That probably looks okay, to stay short. If we break out, well, then I probably got to look to these highs, and that might be a new short setup. As far as long setups go, I mean, I'm partial to running these lows and trading that back up into this current high. And that's probably what I'm looking forward for. Like, if you watched my live stream earlier, or if you've been watching from the beginning, you'll know I'm kind of looking at this idea as a potential range forming. And we just come and take these highs. So the idea I kind of talked about earlier was just like, hey, I don't mind the idea of, we have this high, we have this high, this is an SR flip. We now have these local highs here that we can come and run later, take these lows, form a range here, run them again. That's the high that we break down to, maybe we can come up and take these highs to 68K, or we just break down and head straight to 68K. I'm fine with either of those. But probably going to be looking for longs to the lows of this range. If you want to get into like intermediary ideas, I don't even know how much I like. I mean, it just depends what's happening with price at the time. But it's kind of just back into these lows. Like this probably plays as some kind of scalp. This probably plays a lot of the times into something. I just like this low probably, but yeah, this probably plays TP1. You have a short in profit, long TP, if you TP on your short there, or at least this works as a bit of a hedge. Something like that. Look at this this looks like a monster. This is a nice example too, where I usually like to trade right around the open, and I took this short beforehand, because really the trade came before the New York Open. It just did with the big pump. Like you're kind of wanting to fade that big high delta pump there. I think that's fine. Somebody said waiting for lucky stop loss to get hit so I can enter my short. No hate, just trading my idea. Yeah, I like ideas higher. For me, it's just like, it's just essentially like, just because I would like to short this up here, does that mean I shouldn't be willing to take this short? Like, it's essentially, can you justify the short for me? And it's sort of like, I want a long 68K. Does that mean that I can't justify a long here? If like things look really bullish, there's tons of breakdown shorting, price starts making higher lows, and big shorts are getting absorbed, because I want to long 68K. It's like, no, I'll just trade both. If I get started out of this, well, I guess I'm looking for 68K. I don't mind this idea too, just ranging, and it's just trade what's happening. And so for me, I kind of look at it like that. It's like, I wouldn't mind shorting up higher, but I'm just going to trade what's happening. And for all the reasons I described earlier, this type of order flow doesn't mind ending to the downside. Although a huge short just opened. This is kind of interesting. 30 million short opened, 30 million negative delta, increase in open interest, and a 48 million volume candle. So this is somebody just, maybe they're in this live stream, they fired off a huge short position at market, and it's an increase in open interest, so there's also a limit long filling here. And this person reliably gets squeezed out of their short, but the only issue with this about like making trading decisions on this short based on that short getting squeezed out, which probably is coming here. There was actually a pretty big aggressive short here, 11 million on Binance, and although the numbers aren't as high with the positive delta, usually aggressive shorting is smaller. There's less people willing to short aggressively than, so this is high for negative delta, in my experience. But anyways, these can all get stopped out like here, right? It's like you have an aggressive short at the low, price carries a little higher, you see the big sell-off in delta, and they get squeezed out, or maybe at this high, right? And we tag this high, stop at all those shorts. So like if you're trading this, like scalping this as a range, well, you kind of have the range lows, and then you see this big 30 million short open, and you might be looking to scalp long into this to squeeze out that short, which can all take place locally. Do you talk to yourself out loud like that when not live? No. I mean, I might be mutter to myself like, what the fuck is happening here? But that's about it. I have mutterings. I've been. Somebody says, well, in all seriousness, we actually do live in a meme matrix world. Thoughts on this, the memification of things? Well, I'm sure that's some sort of like philosophy. I'm not exactly sure, like, if I understand what you mean, but I would say that, yeah, everything's a meme. It's sort of like we're at the point where like everything, like World War III is a meme, nuclear war is a meme, like everything's a meme. Nothing's real anymore. It's like, oh, I mean, I said that with like Trump. It's like, oh, Trump's going to buy Bitcoin, or, you know, the U.S. is going to do a crypto reserve. It's like, it's kind of a meme, but it's not really a meme. I mean, it is a meme, but it also might be important, right? Like, yeah. Somebody asking if I talked about Doge already. I did. I'll just kind of recap alts. I mean, the basically, I've gone over all my medium time frame stuff. If 68K comes, that's like 20% lower. It's like, it's hard not to say that we're going 30, 35, 40% lower on alts. That's like 10, 11 cents, you know, maybe down into this trending structure GP down here at log scale. I mean, it's just, this definitely wasn't on my primary one of my primary scenarios for Doge, but it's just the reality. I mean, ETH, again, it's just if we go to 68K, it's like these lows are probably coming. Yeah, so I kind of already went through that. I'm not going to be doing 15-minute chart analysis on all these alts though, like updating every day, but it's like everything's going to be fairly similar. Like XRP is structurally, right? XRP is sweeping a local high, having swept this previous low. I mean, structurally, everything is essentially the same. Doge actually a little bit more bearish locally in terms of making new lows. Trend lines. I'm telling you guys, this kind of thing is like, it's so memey. Trend lines are memes, but low time frame trend lines are, especially in downtrends, are kind of OP. I'd say in uptrends too. You know, that's something, I'm glad this happened on the live stream because it really is like me taking that short. It really is that simple as just, this is happening, I'm going to short it. And if price goes high, I'll probably stop it out and trade a different level. But there's not really like, it's a sweep of this high, price rejecting. It's the huge, we watched the big huge delta increase here on the 1 minute candle. It's the type of thing you want to see at the highs. Price isn't just breaking straight out, it's rejecting below the low. It's, yes, I would have had more time to enter it, and I could have entered on this like retest of this local high on a bearish divergence. That all works too. Nothing wrong with just letting some of that volatility play out. But you're kind of just seeing what you want to see, and if it doesn't work, it doesn't work. That's as simple as it is for me. And just use risk management, understand the premise you're trying to trade and kind of what, I mean, at some point you're going to, like, especially as a new trader and as an experienced trader, I just understand it's going to happen. You're going to try it and you're going to take the short and you're going to put your stop here and then you're going to run out of your stop and then price is going to go and you're going to be like, oh shit, I shouldn't have done that. But then you won't try it the next time and then it will work and you'll start to understand that there's something significant when making the decision here, that when an idea is paying you 10 to 1 or 15 to 1, or if we just break down, 20 to 1 on your risk, it doesn't have to happen that often. It doesn't even have to work that often. If it works 50-50, you'll be trading your your $2,000 trading account and you'll be a multi-millionaire in 5 years. It's like there's just something that people don't seem to understand about the fact that you want to be in this short so as much as possible. And it's not because it doesn't even have to be likely to work, although I think it probably is in this case more likely than not. It can just be a 50-50. It can be even 30%. It could even be 25%, and it makes you money. Your goal, in my opinion, in this scenario, is to be short here. Like, whether it's this, take it somewhere. You got to take it. And you just click the button. But what if we go up? Then you're getting stopped out. But you're what's the best way to explain this? It's like, if you're not short here, but you're trying to short. This is what I would say. I'm trying to talk to people who are trying to trade these types of ideas. So if this isn't the style of trading that you're like, you don't want to take shorts at like the sweep of a high, like a range or whatever. You only trade whatever, XYZ, news events, whatever it is, whatever you want to say, then maybe this doesn't apply to you. But if you're the type of person who's trying to figure out what I want to short this, I want to short the sweep of the high, I want to short this idea, but I can't pull the trigger because how do I know when to short? Like it's going straight up. Okay, I'm gonna wait for a retest of the high. Okay, it's breaking down. I'm gonna wait for this. Oh, this looks kind of bullish. It's like, and you just can't click the button anywhere in here. I think you just like have to understand that your goal for me, I'm not telling anyone how to trade. If you're not an experienced trader, you shouldn't even be trading with real money. You should be paper trading. I'm just trying to explain what I'm doing, my thought process here. Your goal should be to be in the trade and get stopped out if it doesn't work. That should be your goal. Be in the trade and get stopped out if it doesn't work. And if you're watching this and you're trying to figure out how to get short and price just goes straight down and you never got short and you were just sitting here watching it, you're just afraid. You're just afraid that short's not going to work. And if you're just watching this live stream now, go back to earlier, because I went back, before this move happened, I went back and described all of the highs and the ideas in order flow shorting. And it's like, I think I described this before this came. It's just, if you're not willing to look for shorts here, then you're just afraid, because you're trying to trade off an exception. You're afraid that you're going to miss the pump. You're afraid that you're going to get stopped out. But if you're just making decisions based on being afraid of something happening that may or may not happen, then, but you can't trade based on what typically happens, then you're just always going to be making the poor trading decisions. Someone says, lucky, before I start trading, I was a bum and purposeless consumer, and trading gave me a life to live for and a purpose and some meaning. Wow, Hart. That's awesome. I mean, the reality is, the thing that's so appealing about trading is, although we have, like, with the LATF, the Lucky Apes trading floor, my Discord, it's like, it's the community. It really is. And there's people who have been there for years and people that hang out there every day, and probably hanging out right now. I think community. I actually think community is important in trading, because, especially for new traders, it's like back in the day, like if you, before trading was heavily computerized, you were more likely to be interacting with other traders if you were a trader, right? Like on your lunch break, on the floor. But now it's like you're so isolated, and as a learning trader, you don't really even have a perspective on, like, what anyone else is going through. Like, you think everything maybe is unique to you, and you're suffering in some unique way, and that everybody else is printing money, and maybe you're on Twitter and you're seeing some of that, and you just can't figure out a way, when that's just not the reality that new traders are experiencing. And so there's just something that I think is important about getting some perspective. Like, hey, nice to meet you. How long have you been trading? I've been trading for 6 months, and this has been my experience, and I'm starting to have this breakthrough, or I've really been getting hammered. And it's like, oh, yeah, I remember when I had been trading for 6 months. I've been trading for a year and a half. I've kind of overcame some of that, and now my problem is this. And somebody says, yeah, oh wow, I've been trading for 3 years. I didn't even know that. And you kind of have, it's like, oh, we're all in the same boat. It's like, and these are some of the challenges that I'm facing, that other people faced, and it's like, and these are some of the people that made it through. These are some of the people who quit and gave up and they didn't want to do it anymore. So there's that aspect that's important. But on the other side of it, that's really cool, is it is just you in the chart too. Like you can just literally from anywhere in the world, it's just you against the market in a sense. Although I like to think of it as you with the market. Like you shouldn't be trading against the market. You should be trading with it. Don't try as much as you can not to have an adversarial relationship with the market. Like, oh, F you, what are you doing? It's just like accept what it's doing and what do you want, how do you want to participate? Like, it's why I don't like so many like conventional wisdom rules in trading. Like people say, if I take a stop, I stop trading for the day. It's like, why? Like if I take a stop on this short, then I'm not going to short this if it comes. It's like, or if I try to long this and I get stopped down, then 68 comes, I'm not going to long it. It's like, just participate. How do you want to participate in what the market's doing? Like you're not always going to get it right. Anyways, I don't know, but yeah, that said, I think then the other thing that's amazing about trading is it really is, you know, like if there's anything you could ever do where just completely by your own volition and will, you could bring yourself from zero to hero. There's essentially no cap to how much money you can make. And there's nothing but yourself to stand in the way of you becoming the best, right? Like you could think that's hyperbolic or like, well, you don't even need to become the best to make a lot of money. But it's just like this, there's this endless pursuit. Because even when you become good, you can become great. When you become great, you can become the greatest, right? And yeah, and you can make a lot of money. But you have to understand that, like, for anyone listening to this, thinking, ooh, maybe I should start trading. Look, you just 125 million delta, you take the short, and price goes straight down and you win. That's not how it works. Statistically, most of you will start and you'll lose money for the next year. 80% of you will quit. Whoever doesn't will lose money for a couple more years. A bunch of those will quit. And then some small percent will succeed. Martin says, I really get what you just said. Since I've been trading full-time since 2018, it can get really lonely. Having a community where you can chat and bounce ideas is very important. Yeah, I mean, it's kind of like there's just something that keeps, like for most people who are trading, especially trading crypto from whether they're doing it full-time or just as their own like side hobby, hustle, pursuit, they're not really able to talk about it with anybody else in their life in any kind of meaningful way. They might be able to be like, oh, I think Doge could still go up some more. But yeah, so there's just some camaraderie that I think can be important. You know, where people say they don't like communicating with other traders is they say they don't want to take on their bias, right? It's like, I don't want to be influenced by anybody else. I just want to trade my own ideas. You know, I see all these other people posting ideas and then I get FOMO and I don't trade my idea. I trade their idea and then I lose. It's like, to me, that's a little bit of cope. It's like, listen, you're going to be going through, whether you're alone, whether you're with other traders, whatever, you're going to be losing all sorts of trades for all sorts of reasons, not taking the trades you wanted to take because you wanted to take them. It's like, oh, I realized I didn't brush my teeth this morning. I usually brush my teeth, and because of that, I didn't take my trade. I'm always going to brush my teeth. These are the types of things people try to justify, like, why didn't I just do what I said I was going to do? Or why did I do this when I shouldn't have done this? And I actually don't think oftentimes it is because you're being influenced by other people's ideas. You're just looking for a reason to do the thing you want to do, in my opinion. Like, whatever that emotional pull is of, like, I want to long this, or I want to short this, and you're sitting here and you're like, I was going to short this, but I just saw a post by Crypto Rover and someone else that Bitcoin's still going to go to $2 million this cycle. And so instead of shorting, I long it. And it's like, I'm never listening to Crypto Rover. But it's like, you're just finding a reason to give in and an excuse to do it, right? It's like, so for me, I literally do not care what other traders think or are doing, other than if somebody posts an idea, I don't even have to know who the trader is. Crypto Rover. Oh, I thought there was someone named Crypto Rover in the chat. But anyways, I don't even actually have to know who's posting the ideas. Like, something that's really important for me when I'm talking about the trades I'm taking and the decisions I'm making and the reasons I'm doing it is I'm not saying trust me. I can't stand posts that are like, trust me, we're going higher, trust me, we're going lower. It's like you don't know what's going to happen, obviously. Like anyone who understands anything, there's probabilities, but you should be able to explain what you're doing and why in a way that makes sense to somebody. And if it doesn't make sense to them, they shouldn't implement it, use it, do it, right? And it doesn't, like, I might not be able to explain why I'm taking this short in this moment for the first time. No one's ever heard these concepts to the point where they're like, that makes sense, I'm going to take a short. But I might be able to explain the concept with, say, oh, that's interesting, I'm going to look more into that. And they go down a path, and they watch some videos of mine, or they join the Discord, and they see I post about it a few different times, and they say, I understand this. I understand what I'm trying to do here, and I'm not doing it because I trust Lucky. I'm doing it because I understand it. And even if Lucky wasn't sitting here saying, I'm taking this short, I would want to take this short, because for the same reasons he would want to take the short. So I think that's what's really important, is to be able to explain what you're doing and why. And so for that reason, I could see an idea. I have no idea who it's from. I don't need to trust the person or not. And I could like it and trade it if I like it. Or I could decide I don't like it. And so somebody could post a chart, post some different concepts I'm familiar with, and they could say, I'm entering this trade here, and I could look at it and say, ooh, I like that. And I don't have to trust them. I don't even have to know them. And I think that's really how, I really think that's how you should treat, like, for someone like me with a forward-facing presence on trading, it's an abuse of, even if you really like an idea, it's an abuse of that relationship with anybody who's looking to you for any kind of insight or thought, to just say, trust me. Because why can't you explain? Why can't you explain what you're doing and why? If you can't explain it, then and somebody doesn't understand it, they shouldn't do it. So if you even want to talk about it, you should probably try your best to explain it, or don't even talk about it. Like I can't stand. I mean, I literally can't stand it. It's not about whether someone's right or wrong. Like, somebody says, we're going up today, and someone says, why? And they say, you'll see, trust me. And then we go up and they say, I told you. It's like, shut up, you loser. Yeah. So I think I don't even actually know what I've been ranting about or rambling about here for a little while. But I really don't think you should trade ideas you don't understand. I don't think there's any point in talking about ideas you can't explain. And I don't think there's any point in... I don't actually... I would say I almost don't think there's any point in trying to teach or I don't know. I'm trying to think if I think this is true, but even teach ideas that you aren't willing to demonstrate. Like, that's like in the Discord, there's a lot of like educational content on concepts, but I really don't like the idea of just having like a static video, 15-minute video, 20-minute video covering order flow. Something like this live stream is more like demonstrate, right? Like, what are you looking for and willing to do in a live market condition, and why? Because it really everything looks so different live than it does. Like, unless you've seen something 1,000 times or 10,000 times and you've looked for it 10,000 times, it doesn't look like the thing that you're looking for until after it already happens for a long time. And when you're watching live price action, it's like, this just looks like the most bullish thing you've ever seen in your life, even if you just watched a 20-minute video showing you 100 examples of shorting this. And you'll say, this isn't it, though. This is like, holy shit, this is bullish. And then it's like, oh wait, no, this was just the thing that I was looking to short. So anyways, I like to demonstrate stuff live. Whether like something like a live stream obviously is great, but obviously just that's why I do live updates, is to show it in a live market condition. Yeah, we're just kind of hanging out here. I mean, I think lower is likely still. I kind of want to just see what happens after some of these initial sell-offs, because like the behavior here kind of matters in a way. Like it's kind of interesting, especially if you could even be scalping some of this. So we have the initial ramp up here, a bunch of aggressive buying. That's what we shorted. We see a little bit of buying getting absorbed here. We see another big bearish divergence form here, locally, big locally. It's something insane. Another sell-off. Then we see some aggressive selling here. Selling. A little bit of aggressive buying coming in again. Nothing major, but a little bit of a bearish divergence forming. Again, nothing major, but it exists. But here, a little bit more aggressive selling on Binance, but there's much more aggressive buying. Not a bullish divergence here, just aggressive selling. This guy closed an aggressive short. That showed some signs of absorption, price getting pushed lower. Big sell-off candle here, 34 million, 10 million, just a little bit of positive delta. So one thing to think about is this. Like, I'll say something like a little bit of bearish absorption here, nothing major. That doesn't really mean anything, in the sense that it's not to say that, oh, we need bigger bearish divergences to go lower, or we can't reject off a bearish divergence so small, because it's just the divergence here. If there's limit sellers just pushing price down now, the divergence can only be as big as people are willing to long. So people got really aggressive longing here, price is coming down, willing to long here, maybe get really aggressive here, and then a little bit of buying here, and then price starts going lower, and a little bit, it's like if price is going lower, the divergence can only get as big as A, people are willing to market buy, and C, as much as people are willing to absorb. So is it bullish that there's not a big bearish divergence here and it's just slight? No, it's just kind of meaningless information in a way. It's just, there's not that many people buying here. Can you blame them? This is a big rejection. You know, like, is there a huge edge in shorting this SR flip here? Retested this. Probably not a huge edge. I mean, if there was 50 million positive delta here, maybe it's a little better, but it's probably not like bad as a scalp. But I wouldn't say it's probably something you would ever want to trade unless you're like have a super low fee situation. I don't mind actually answering this question here, or talking about it a little bit. Somebody says, do you have any advice on how to handle a losing streak? I had a few successful months, and I've always traded after the approach of trying almost any idea, but with tight risk management. So I know that my strategy works, but nowadays I often get stopped out. I don't know if I have to change something to adapt to the market situation. Okay, so I want you to just clarify a couple things. When you say tight risk management, do you mean tight stops? Or do you mean small sizing, wide stops? And then just give me a too rough information. You actually probably should have the hard numbers on this, but it's okay. I understand most people don't. Just roughly how many trades have you taken, and what type of loss streak are you in? Like, so if you say, I've probably taken 5 trades a day or 1 trade a day, whatever it is for the last month, and I just found myself on a 10 trade loss streak or a 20 trade loss streak or a 100 trade loss streak. Just give me some numbers to play with when answering this question, because it matters a lot. And give me a sense of the type of setups you're trading in terms of like I don't actually even need to know if you're trading like ranges as a sweep of shorting the highs, longing the lows. Just on average, what would you say the distance of price of your stop loss is? That'll tell me a lot about how you're trading, and that's all I need to know. I may be back in 2 to 3 minutes. I'll give you time to type that up. I gotta take a leak, and I think price probably going lower here, maybe even in the near term. But anyways, I'll answer that question, then maybe chat a little longer, and then wrap up the live stream. All right, I'm back. Can somebody type how many people are watching this live stream, like how many it shows you? Because the number just hasn't changed for me since it started, which I don't think is right. I'm just curious how many people 178. Okay, so yeah, the number's just wrong. Oh, everyone, people have different numbers. All right, so he never responded about the question about the loss streak there. It's really hard. It's really hard to answer such a general question with no details because, like, are you talking about a 10 trade loss streak, a 2 trade loss streak? Like, what do your trade setups look like? It's just some loss streaks are just inevitable mathematically with any trade system. Like, okay, here's some. So it says really tight stops, approximately 0.5 to 1%. And I have taken 77 trades in the last 30 days. I'm currently on 11 trades losing streak. I am using liquidity concepts in combination with structural levels. Okay, so let me just think here. $77 trades. And you're on an 11 trade losing streak. Can you give me, it sounds like you actually have some decent stats like recorded. Can you just give me your win rate over those 77 trades? I think you're pushing. So you're basically taking like 2.5 trades a day and 0.5 to 1% stop losses. Trading a lot of low time frame ideas. I think you're probably in the realm of, I should kind of know this math a little better off the top of my head. Like, even if you're trading with like a 40% win rate, and I'm assuming you're trading higher risk reward setups, like something 4R plus. That's an assumption, but it's just probably the case. You're probably statistically within the realm of like a 6 or 7 trade loss streak is probably happening fairly often over the course of 77 to 100 trades. There might be some errors there, of course, where, you know, something that can kind of happen with a loss streak is it can be really hard. Okay, so you're roughly a 44% win rate. So yeah, this is a pretty high contributing loss streak to your win rate. Yeah, 11's pretty high. So like I think 6 to 7 probably can happen somewhat regularly over that sample size. But the problem with like a loss streak is you start to psychologically make some errors. So I guess the best thing to do to deal with a loss streak is, 5R trades. So you still should be profitable over that sample, I imagine, if with 44% at 5R, even with an 11 trade loss streak. That's kind of countered by 2 winning trades. But you kind of have to identify your losses and just say, like, if you look at the trade in hindsight and you say I made an error there. Like for me, I already know if I got stopped out of this short, I wouldn't put it. I know before I take the short that I would never put this in the category of an error. It's just it didn't work. It's fine. I mean, there's nothing I can do. These are the types of shorts I'm looking for. I know why I'm looking for them. I understand I can get stopped out. It's like there's nothing to correct. It's just I lost. And if my trade loss streak is built up of scenarios where I look at the trade and I say, yeah, I mean, I would take that trade again. I would take it tomorrow, then there's nothing to correct, and it's just. But if you're looking at your trades and you're saying, I probably shouldn't have taken that trade. Why did I take that trade? I think the bigger problem that someone in your situation is going to have with, I really don't mind your stop loss distance. Like people saying stop loss too tight. Of course, if you trade with a tighter stop loss, you're more likely to get stopped out. It's just that simple. Like if the tighter you make your setup, you can say the higher risk reward it's going to be, but just mathematically, if you're always trading with a 0.1% stop, you're going to get stopped out if you're more often than if you're trading with a 10% stop. There's just no way to avoid that. One thing you could consider is like, how often are you getting stopped out of a trade, just tagged out right before it works? Like, so there's a difference between taking a stop that stops you out of a trade that just wasn't going to work, and it's like, oh, like I'm happy to be out of that trade. My stop loss was in fact, like for example, this short. Like I kind of said I'd be willing to let this kind of play out a little bit. I probably don't want to get stopped out of it there. If I get stopped out there and then it just prints, then it's like, yeah, that's just like kind of arbitrary. But if I give this a little bit of room, and this happens, and this happens, it's like, and I decide to close that trade, the stop loss here isn't even a problem. Like, if this is a 0.8% away from entry type stop loss, it's not a trading error if price does this, right? It's like, yeah, I for the reasons I got out good. I need to close this trade here, or I'm happy to have closed it here. If I close it here and maybe I never get back into it and this happens, it's like the whole idea is kind of screwed up, right? Like it's not traded very well. You're not actually even trading the idea. You're just sort of arbitrarily closing your trade. So there's good stops and bad stops. A good stop to me is typically, you can't know, right? You can't know for certainty. But like, for example, let's just say you want to long this low. And this is your idea, and you're saying, okay, I want to long a sweep of this low, but you're trying to arbitrarily inflate the risk reward here by running a tight stop, and maybe it's even a limit order, but it's like, okay, I'm trading a sweep of this low, I'm in the trade, and this happens, and now you're just out of the trade. It's like, okay, well, yeah, this actually might be offset by the fact that for every time you hit this trade, it's 33R. And it might even be, like statistically, maybe it is EV positive to trade it this way. Like you're going to take more stops, but your winners are going to be massive. I don't know. But you might just say like, you know, maybe it would have been prudent to trade it this way. Yeah, I would say this. So I guess to answer your question just generally and broadly, analyze your losses on a case-by-case basis. Look at all 11 of those trades and just say, did those trades make sense? Were they structured well? Should I have been in them? Would I be in them again? Is there anything I should be changing? And for the trades, the answer is no. Those are just like, for example, I'm going to trade 68K. I just know, like I can just tell you now. I can tell you what's going to stop me out. I can tell you how I'm going to lose this trade if it doesn't work. And I understand that, and I understand the type of price action that's going to put me into the trade and then just end up in me getting stopped out, you know, after a trigger runs a little bit, or even round tripping the trade. I already know all of that. I don't even have to know what's going to happen to know I'm going to be in that trade under almost every condition except for like one. And and it's not, I'm never going to consider it a trading error. I just already know. I can already accept the risk in that trade. I can already accept the scenarios where I lose. And yeah, so I don't know if that makes sense or is helpful in any way. But as far as dealing with a loss streak, it just depends. Like if you think the loss streak's influencing your
trading decisions, you could take a break from trading your primary account. You could do some paper trading. You could trade with really small size. You could be more diligent and just kind of really thinking like, should I be taking this trade? Am I kind of trying to make an emotional comeback here after a loss streak? I think one of the more damaging things about loss streaks, I mean, in my experience, this is true for most people, is not that it puts you into trades that you shouldn't be taking. It keeps you out of trades that you should be taking, because you don't want to take another loss. So it's like, oh, it's like, I got stopped out of a short here, and now I'm tired. Like, this is really how people will make trading decisions. I got stopped out of a short, and this is happening. I don't want to take another loss on a short. I'm not taking another short because I just got stopped out on a short. It's like, so then they start building this idea in their head that's like, I'm sick of this. I'm not taking a stop. I'm gonna long. I'm done with shorting. I'm longing. And it's like, that's where, or they don't take the short and they compound the problem by taking the long when they should be taking the short. And they're not really trading their system anymore. They're just trading the last trade they took. I think that's the biggest problem people face in loss streaks, is they think their last trade has something to do with their next trade. So that's how they're making trading decisions. But just imagine, like, prices coming here. I like to put it this way. Imagine you had long this, shorted this, long this, shorted this, long this, and you were printing along into here after trading every single pivot perfectly. What would you be wanting to take that short there? It's like, if that changes your mentality of like, yeah, if I had traded everything perfectly here, and I was in the long from the peak of bottom and I shorted the peak of top of everything, it's like, yeah, I'd be willing to take a short here that looks good. Well, then what's the difference, right? Why does the fact that you just took a stop somewhere or took a trade that lost have anything to do with the next trade? Because if it in fact mattered what trade you took last, or anybody took, or the loss streak they were on, to whether this trade was good, then I should be consulting those losing traders, right? I should be saying, yo, I need to know what stops have you guys been taking? Like, are you on a 5-trade loss streak shorting? Yes. Okay, I'm not going to short then, because the trade you took last matters. I'm going to also inform everyone, hey, I'm not trying to rag on you. I'm just saying, using some logic to like justify or to explain why you should not get in that kind of thought hole. Moritz took 11 stop losses, everybody, so we got to be careful here because this could just be another one. It's like, no, it doesn't matter. And for the same reason it doesn't matter to me, it doesn't matter to you, because it has nothing to do with anything that is coming next. And the trades you took last don't matter about the trades you take next, or what the outcome is going to be and the reasons you might take those trades. And so I would just say, for as much as you can, do not think about the last trade you took or the last series of trades you took as having anything to do with the next trade you take. Unless there's identifiable errors there that you could correct for, or something to learn from them. But yeah. Yeah, I don't know. I don't know what else to say about that. Bit of aggressive shorting coming in here, frankly. You know, it's a little interesting. I guess I'll point this out for the viewers here. So we have, like, here I said, like a little local bearish divergence, SR flip. You know, this is probably scalpable as a short, but you probably already have to be looking to take profits into this low, and particularly when you start to see like 35 million, 22 million, aggressive shorting coming in at the lows, increase in open interest, like, it's not to say that price has to bounce here, but you're just getting a little wary. But what's interesting here of some kind of correction, if you're shorting here, right? Like, it has maybe nothing to do with this short, but you've got to get wary if you're shorting this SR flip, that this is happening here. But it's interesting that where do people want to aggressively long hundreds of millions of dollars, $10 million positions, literally here, and where are we starting to see the big aggressive shorts coming in? Like here, it's just kind of interesting. But like I said, I mean, I'm not. It's so hard to. If you're in here scalping, you might be looking at all this structure. You might be saying like, okay, I'm going to close this here, and I'll reopen if we break down here or whatever. But as far as this trade goes, like, in a sense, nothing matters that's happening here. For this short, but for this short, it could matter for, you know, a scalp long off of this sweep of this low. You know, maybe you're looking to long this. If this reclaims and take profit into this, this is all like confined trading decisions, right? Same thing with all of this. It's like it's relevant probably to price action here, but it just so often all resolves in this context that, like, if you're saying I'm going to close this short here because really aggressive shorts opened up here and I'm going to reopen on a retest of this, you are oftentimes just not even getting back into the short, right? So it's like there's a difference even between like scalping along off of the sweep of these lows and trading it up into this high and just leaving this short running, in my view. This is kind of, for me, a set it and forget it until the lows come type short. I mean, I'll probably be sleeping on this. I wouldn't mind getting into a situation where I could pull some risk off of this position, but we'll see. This is the big breakdown candle. Big selling here. So this is where the majority of these Binance longs are getting punished. We have 90 million negative delta here. A lot of these guys are getting ran out. So can price bounce from anywhere in here? Yeah, I mean, we can do a lot. I would say, you know, so basically, if you want lower here, all you're hoping for, one is there's still actually quite a few Bybit longs need to be run out. You're hoping what ends up happening is like price starts reacting, longs start chasing back in, and more bearish divergences form. So I'd say in the context of shorting against these longs, you're kind of hoping that something that hasn't happened yet continues to happen, which is you've kind of targeted these longs, and now you're kind of hoping that any more aggressive longs that come in keep getting suckered and punished like this, and price just keeps carrying lower, which may or may not happen. And what you're kind of hoping doesn't happen is that everyone just starts shorting aggressively, price grinding higher, shorting, and then squeeze everybody out and stop you out at the highs. But I will not be around, likely, to see any of that happen or not. I'm going to sleep with a TP at the lows. I think there is a good chance that I'm awake for this low to come, and I may lock something in there, and just, I'm not even gonna say stop to entry, whatever. Probably if entry is getting retested, this high is getting, it's like stop here, stop there. I honestly would probably just leave my stop above the high, and hoping to pull something off this short maybe before going to sleep. But honestly, I would say I don't even care if I don't. I'm fine. I think there's a pro and con. I literally don't care. I don't mind sleeping on this position. Like if price, it's just, if we start ranging here and this is happening, maybe a little bit of bearishness, a little bit of bullishness, I'll just sleep on it. If I wake up to this, great. If I wake up to much lower, great. I can just accept a lot here. I can accept the risk. I think this is the type of place where you start to look for some kind of bounce. For this downtrend to really get tested. Big 90 million delta candle, take all these lows. This is where the reason you start to look for a bounce is just a lot of longs have now been stopped out. A lot of longs that chased into this, a lot of longs that opened at the top. We just see it in the delta. And so what happens is if price starts coming like this, they're all out. What do you do if you open a long, you get stopped out, and you start seeing price do this? Well, a lot of people are compelled to chase back into the trade, and this is where we find out if we get a lower high, and maybe we see the 100 million longs open up here again and just get flushed out. And that's what happened here. After yesterday's New York Open. So here we had this big wick through the highs. We have 124 million positive delta in a 1 minute candle. Are we noticing a little bit of a trend here? As price wicks through the highs and then price goes straight back down. It's so similar to this setup in terms of order flow and structure, kind of, right? Like a horizontal breakout, just tag the highs and then trap everybody. But then what happens here is as price comes down and runs the lows, now you see a lot of these long positions starting to get stopped out. Where is exactly what I'm looking for? 58 million, 45 million. So we see kind of the inverse of these long positions. And then we see a bunch of longs opening up again. So they just get stopped out, price goes higher, they start opening aggressively. Oh, I just got stopped out, I don't want to miss the move. And then price runs them all out again. And then as price starts carrying higher, they all start opening aggressively again. So that's kind of the potential here, is that the bearish, but what might happen is they might not chase in, right? So if they don't chase in, there's no strength, price just keeps going lower, wipes out more longs. But price starts going higher here, you're not surprised to start seeing some longs chasing in and maybe get trapped again at some local highs. But what's going to happen if nobody wants to long? Well, then price isn't going to go higher. I don't understand your question, Jay Ferg. You said, so we should wait for another high to enter a short there. I'm not sure what you're saying. I'm going to short from higher. And would I short here? I mean, well, it's kind of complicated because I'm in a short, right? So it's like, let's put it this way. I'm carrying a short here. So the question is, would I short here? Well, if I close my short right now, what's the difference if I just reopened it, right? I'm carrying a short. So would I short here? The question is, the answer is kind of yes, because I'm in a short. And what's the difference if I close this short and just reopen the short, right? I'm short here. But my trade's starting to look a little bit like this now, right? Like I'm probably short everything in here. And I want to be short this, 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 I want to be short. So I just want to be short everything in here. And would I short this like this? Probably not. Would I short it like this? Probably not. It's like, so I'm kind of in this short at this point because, but now instead of this is like unrealized gains, right? Unrealized gains. That's one way to think about this position. Like, but would I, like the best way to put it is this. If I'm going to enter a short, I would rather be in this short if I'm gonna short something today than like saying I'm gonna wait for this. Like I'm gonna wait for this low to get taken. I'm gonna short like this. Is there anything wrong with this short? Not really, I would say. I mean, probably not. It's just not the short I would choose. But I would choose to carry my short here. So I'm in a short. So there's people who, there's something funny that happens with people, which is that they overvalue, or they're overly concerned about a unrealized red than unrealized green. So for example, just psychological, if you're short here and you have a bunch of unrealized green, that's great. Okay, you're willing to round trip some of it, you're willing to whatever, you want to hold the short. If you open the short here, if you close that short and just open the exact same short here, and it's the same thing. Like let's say that you have $1,000 trading account. I'm just gonna spout off just random numbers, and you're in $100 of profit here. $100 of unrealized, it goes to $70, $60, $50. You're like, that's fine. I'm willing to round trip this. I think it's a good entry. You close it and you open it here, and now instead of being unrealized 100 going to unrealized 50, you're now, because you capture the $100, you've closed it, and you open the short again, and then price starts going like this, and you're in red 50. Red 50 instead of a green 100 going to green 50. That feels way worse for people, right? It's like, oh my God, I'm losing this trade. It's the same thing, right? One feels like losing, one feels like winning, and you've changed nothing about actually how you're positioned. And so I've seen people say like, oh my God, they'll be here. Like I accidentally just closed my short. I meant to do something else. I clicked the wrong button, and I think we're just gonna nuke. It's like, just open it. It's like, no, but I don't want to short here. But it's like, if you have a $1,000 short position from here, and you're carrying that in profit, and you accidentally just closed it here, and you want to be short still, and you open you've captured all of the profit here. So now you're plus your profit, and you just reopen it. Nothing's changed. It's just that now the unrealized number is going from really green to less green, and instead of going from really green to less green, it's going from the unrealized numbers just starting at 0 and going to red. But it's the effect on your account is the same. So anyways, these are all kind of hard things to like really break down how they should influence your trading. But you know, a lot of people would say like why wouldn't you short this? Like it's a breakdown, it's this. Well, in a way I'm shorting, I'm carrying my short, right? I'm carrying the short risk. So it's like you are shorting it. You're deciding to be short here. And you're deciding to be short through some of this, and you're deciding to sleep on the short a little bit. So it's like whether you're entering a short here because you're not short, or you're carrying a short and you're accepting the risk, it is kind of the same thing, frankly. I say this often, is that a lot of concepts in trading are just like shorthand for much more complicated concepts. They're like, they're just approximations of like what you're doing and why. And like it's really hard to have like a super dynamic, like you could say this, you could say like, I'm short here, but I'm closing my short if price gets back above here, and I'm only reopening it here or here on a breakdown. And if we break down, then I'm reopening it with a stop above here. It's like, well then, wait, what? You're closing your short exactly where you opened it. If this happens, it's like, but now you're in a situation where you are just out of your short completely, and you can re-enter it up here. If this happens, you've captured all of this profit and you're just shorting again. Or you're just back in guess where you started, but it's when price is trading back below a key level. Like that would be one way to think about this, and another way to think about it would be, I'm short here, unless we reclaim these highs, and this is the short end, and this would be like, I don't love this short. I'll tell you why, is because this short is what a lot of people are going to be in these situations from the highs, and what I mean by that is, a lot of people will trail this. So if they were in this short, they're going to now trail their stop loss to here. And I think this probably gets targeted a lot. And so I don't like the idea of shorting with a stop above this high as I'm going to go to sleep in this short, because, that's why I wouldn't trail my stop there. I'd rather just round trip. I'd rather take profits now or round trip this entire trade than put my stop here. I do not like a stop here. Anything would be better to me besides that, because this almost guarantees I get stopped out in so many scenarios. If I'm going to short this, then I just don't want. I would rather my invalidation be. I think I'd rather. This is tough. I say I'd rather be here than here, but probably this short looks more like this, frankly, at this point. So, anyways. Some people saying they use money tar concepts plus some lucky concepts. Lucky psychology. Someone says money tar and lucky is just the deadliest combo. Someone says, wow, investment news came out, why it keeps on dump. I don't know what news came out, but I described earlier why I don't care, and typically it's just not that you should do the opposite in the sense of what the news is, but you should do the opposite of what people overreacting to some arbitrary news do, I guess. But that's why I just look at technicals and order flow. Someone says, so we should wait for another storm. Oh yeah, that's what I just read. No, J Ferg, can you? So you said, should I wait? Yes. Do I wait for a pump then enter short off that pump? Well, I don't know what's going to happen, right? Like, I would say this. This is going to apply to a lot of people watching this live stream. A lot of people, I don't know your experience, right? I don't know how long you've been trading. I can make some assumptions based off of your question. But a lot of times, like a trader like myself is making just kind of very specific technical decisions on structuring trades. And like for me, the reason I'm not stopping out my short here is because I think there's a lot of scenarios just where we don't pump again and we just break down. I want to be in the short. But there's also scenarios where we pump again and I still want to be short. But you should be not probably trading real money. Like what can happen in situations like this is you're looking for trades, right? You're looking to make some money, I assume. And so maybe you're on this live stream. I don't recognize your name, but I could have just forgot it. But maybe you're not a very experienced trader, but you're here saying like, yo, if we're going down to 68K, like where do I short because I want to make some money? But you really need to know how to position properly in terms of sizing, invalidation, all that kinds of stuff, and to accept losses and understand that the next trade you take at this stage of your trading career is irrelevant. If it makes money, it loses money, it doesn't really matter. Because if you keep doing what you're doing, which and this is making a lot of assumptions, which is coming into this live stream and looking for a trade setup, and maybe you find out, oh, you said you took your short live on stream up here and I missed it. I just came in. Can I short now? It's like you're missing the whole point of any chance you have of becoming a profitable trader, which is you need to learn a bunch of concepts and apply them consistently with discipline, right? So like people, yeah, I don't know. It's just like I could literally round trip this whole trade and lose it, and for me that's fine, because I understand generally the what the next 1,000 trades I'm going to take look like, and it kind of just requires me to hold this trade. But I can't really tell you what's going to happen, right? I'm just can tell you where I'm short, why I took it, and that that I think it's kind of a nice idea. And to keep it all into kind of context here, um, three, 10. Man, it's so interesting. It's so interesting how often you see the same thing just happening over and over again. Like for example, yesterday or a few days ago, I took this short, right? And there's some similarities here, right? Like this is just an SR flip, sweep of local highs, and I took this short into the lows. So let me give you guys a brief, like this is just gonna full, full disclosure of what the Discord is looking like, right? On the weekend, I gave some scenarios about like, just question like, how would you position here? Like, if you want to trade this range, my thought was just trade it potentially as a breakout. I thought was the most sensible thing here, but like for example, I usually don't trade the weekends, but like I took this short, so it's like a sweep of these highs, SR flip, looking to short this SR flip, rejection on a low time frame, bearish divs forming a bit here. So we have the big bearish divergence forming. This is a few days ago, and this is here on the chart. Okay, so when I say like I like to demonstrate ideas, I'm shorting this. Literally, I mean, people saying like it's too tight of a stop to have like, I mean, my stop is like less than 0.5% away essentially. I'm shorting this SR flip into these lows for the same reason that I'm shorting here, and I'm going to show you a short I took a stop on. But it's the same thing. It's an SR flip, super these highs, big increase in delta, bearish divs. And so that short is here. Oops. For the same reasons I talked about earlier in the live stream. Big bearish divergence, CVD making a higher high, price making a lower high. Willing to short that SR flip. I took the short, everyone. So kind of the same concepts. And I said, might get a runner here. I'm certainly looking to TP off of this for any reason at this point. Let the rest run. I said I'm not interested in longing this low. We did run a little lower. Just gave some lower that, I'm going to TP on this if I get any strength. I'm going to carry it lower if I can. But right now I took it off the SR flip. We're SR flipping. I'll let it carry a little bit more if I can. Stock market's breaking down. And then I got trailed out for a TP1. But anyways, I described the next short I was interested in taking, which was coming up and sweeping these highs, but I'm not shorting yet because we're just grinding in an uptrend. So I'm going to wait for either higher or some weakness. And there's certainly ideas here, but I'm just explaining why I'm not taking the short yet, even though I'm interested in it. And then the specific scenario I'd be willing to short is price holding this up and impulsing into this trend line. And so I'm just to give you a sense of what I'm doing in the Discord, and that was this idea, right? not this idea. This is the idea I was fading. This would have actually been a really nice short too, by the way, order flow wise and whatever. So this was the big bearish divergence, shorting that into new lows, willing to TP into any strength. This was the short yesterday that just barely held on, sweeping this into these trend lines and got the nice TP out of that. Then I said I want to short again a higher low, a lower high, but there's some scenarios where we run higher, so I just took a half R short, which means like I put half risk on. If I'm risking 1% on this, I'm risking 0.5% on this. And I got stopped out of that, had some short ideas higher that never got triggered, and I just went to sleep. And I took this short. And I got stopped out, and then I took this short. So again, it's like if you get 5 to 1, 4 to 1, 3 to 1, 4 to 1, 5 to 1. It's like, so that is, although I never updated that I took a short here in the Discord. Just pointing out the big bearish divs. So this is, and here's just something that I think probably some people will find overwhelming. I mean, I've been sitting here talking for 3 hours, 4 hours almost. When I'm talking about this, I'm sharing what I'm looking for. I'm not taking the short yet. What are the scenarios in which I would take the short aggressively? I annotate it, and then I make a 3-minute video on the idea, and then explain that although it's not like A++ what I would like to see, it's probably, it's just probably look for a short, just not like super, super happy about it. Start sprinting, then we run the highs into the New York Open, and fortunately we just reject, right? But anyways, literally the same premise. This is why I do this. This is why I describe it. Is if you go through these, that short, this short, this short, that short, and what I just took today, it's literally the same reason. For the same reason, I'm in this short. It's almost the same structurally as an SR flip with the highs. It's almost the same with order flow. It's almost the same. And so what I want is for people who are a member of the Discord, or even when I'm communicating with you, is not for me to be telling you when to short me. I'm not giving those up to say it's time for you to short. I'm explaining what I'm shorting and why, or what I'm longing and why, and I'm going to take wins, I'm going to take losses, but so that you can prepare and just realize there's these opportunities, there's this way to make to structure trades, and if you understand it and you like it, you can implement those ideas if you'd like. But yeah, and after a while, at first it might be kind of confusing. You're like, I don't get it. What is the delta? What does that 123 million mean? Or what does why would price go down if everyone's longing, or whatever it is? You start to understand the ideas. There's pattern recognition. You're like, oh yeah, this is like you know, I would take maybe this short for the same reason I would take this short, for the same reason I would take this short, this short, this short, or this. There's not every trade's the same. Like there's different concepts, but you just start to build that pattern recognition. And so instead of every day being kind of like having no context for anything that's happening and thinking everything is completely unique, which I mean, they say every moment in the market's unique. It's true to an extent, but it's like the same types of things happen over and over in half or 100 years in every asset. But instead of you're just going to start recognizing those patterns in a sense. And what I would prefer you do is start to think about not what's going to happen now, Jay Ferg or anybody that this might apply to, and how you can participate in if price is going to go down, if you should be short, but just how to plan your next trade, and not just your next trade, your next 100 trades and your next 1,000 trades, and understand that the only way that you're ever going to beat the market, so to speak, and trade profitably is if you can duplicate a type of behavior consistently over and over and over again. And the next trade really doesn't matter, because if there's nothing systematized, if there's nothing sound happening in that decision process, then it's just all going away anyways, with almost perfect certainty. Yeah, so what I would just say, like, for example, like, what happens now, I don't know. I mean, I'm short. Tomorrow, there's situations where I'm long, and there's situations where I'm adding back to shorts. Like, there's situations where I'm, for the same reason I was trading this SR flip as a short, I'm willing to trade it here, right? Like, this is happening, this comes in, and then this is happening, and we just have massive bearish divergences opening here. And I'm just like, I'm willing to short this SR flip for continuation. And so whether or not it's about waiting for a pump or shorting now or doing whatever, it's like, wait for something that is actionable. And if price just goes straight down to 68K from here, then I guess you should have been short. I don't know. I'm just gonna wait for something actionable that I feel comfortable taking a new position, both either long or short. Okay, so someone's asking something that I'll just answer, and then before I sign off. So they say, Lucky, how many trades a week do you average on Bitcoin and in total on crypto? It really doesn't matter. It really doesn't, because I'll just say it's probably more than you or more than most of the people here. And it's so, I trade a lot of different styles and systems and ideas. So like, for example, when I was doing some of my scalping, like, stuff and like one day I posted, I took like, I don't know what it was. I mean, it was like 350 trades in a day and like 1,200. It was over 1,000 trades probably over like 3 days on Bitcoin. And I posted all the trade stats of like basically, you know, I was like micro scalping price action. And so in that case, it's like, well, I took 1,000 trades in 3 days. And so, but is that like aspirational for somebody? I would say, if you're like an aspiring trader, like, take a lot of trades, trade a lot of time frames, but do it with paper trading or like essentially no risk, just to get experience. So what is there to say, like if you're trading a range on the 1 hour chart and you're trading range highs to range lows, well, you're probably not taking 1,000, unless price action looks like this. You're probably not taking 1,000 trades in 3 days trading this range. If you're trading this range, you're probably taking 1 to 2 trades a week in this range. If you're trading some lower highs, trending ideas, you know, you might be taking 1 to 2 trades a day, blah blah blah. But yeah, I just don't see the point of the question, because I could spend 3 days scalping in a week and the number could be 250, or I could literally just take 3 trades in a week and then it would be 3. But if the answer, like, some people will try to, the reason I don't think it matters, like, people are trying to figure out, am I taking too many trades or am I not taking enough trades? And it's like, well, you're probably never, if you're trading with real money and you're not a profitable trader and it's meaningful money to you and you're a losing trader, you're trading too many trades with real money. There's almost never a scenario where you're trading too much to learn and to like, you should be paper trading. Like, if you can't, I was actually thinking about doing this. I was thinking about doing a 1,000x leverage trading day challenge, where I trade on 1,000x leverage. I was just trying to think how I would want to structure. I don't even actually think I can do it. I think I can do it profitably with like, and I'll probably take like 900 to 1,000 trades over like, I mean, it'll be more than that over 10 hours, and just see what happens. Like I'd say it's like the like hardest level difficulty. But anyways, that'd be something like I would do it like meaningless money, like $500 or something, and I would be trading each position size like $500 or $1,000, but each position is like $1 times 1,000, right? So I basically have 1,000 clips to fire at 1,000x leverage, and just see what I can do on that low of a time frame. But that's like the type of thing, like, I don't think it's your top priority, but if somebody like me would be curious to like experiment with the market in that type of context, even for fun, just as a challenge to see if you learn anything, like, and track the results, it's like, I just think that there's so many people. So you have to understand, I've been doing the Discord for years now. But is it almost 4 years or something? And so I'm interacting with a lot of traders, like thousands of traders, over the years, who are from all different levels of experience. But there's a lot of people who just come in, and in a sense they're coming in to learn because they're joining my Discord, which is pretty apparent. It's like an educational Discord. It's not a signals Discord. Yes, I'm sharing trades I'm taking. I'm saying I'm looking for this, I'm entering now, that sort of thing. But it's not a signal. It's probably a little bit overwhelming in terms of it being educational focused, right? Like explaining exactly what, exactly why, and all that stuff. But even such, I feel like a lot of people come in to, they handicap themselves because they're like, okay, my goal is, like, I'm coming in and I'm only going to take the trades you post, or I'm only going to take one trade a week on the weekly time frame. And they're a brand new trader, and they're saying like, I want to be really strict and really, but they don't have any trading experience. And so it's like, that's understandable from one perspective, but your priority needs to be to learn. So you should open up a paper trading account. I actually have a paper trading platform. It's listed in the Discord Trading Arena that you can use for free, and you can trade with fake money, and you can track all your stats. And it's like, open up a trading account, a paper trading account, and just take a bunch of trades. Just do as much as possible, because you're going to start to understand the outcomes of your decisions over higher time frames, taking 100 trades versus taking one trade. And that's valuable. It actually can give you confidence when you start implementing ideas, and you can kind of speed run it. And you shouldn't do that with real money and meaningful money, because you're going to just have a lot to learn. A couple live streams ago, somebody was just saying, hey, how is my risk management? Basically, I have a savings account with $25,000 in it, and it earns $3 a day in interest. And I'm risking my interest. So I take a $3 risk trade per day, and that's all I'm willing to risk. Is that a good way to learn and make sure, like, the worst that can happen is I lose the interest on my savings account, because I don't want to risk the 25K. And it's a good risk management strategy, because you just have defined risk. You say, I can only lose $3 a day at worst if I lose every trade every day for the next year. And that will just basically be paid for by the interest I'm getting paid on my savings account. But it's a bad strategy for learning, because you can only take one trade a day. And so you'll sit there thinking, oh, I should be in this trade, but I'm not going to execute or whatever, because I've already lost my $3. So you're just arbitrarily limiting your ability to gain experience in that case. All right. Daniel says, I just looked at the chat. Lucky for the 66 to 60, or just joined the chat. For the 66 to 68K forecast, is that a near-term projection over the next month or two, or more mid-term, meaning over the next several months? It doesn't really matter. I mean, it's a level I want to trade on one chance. on one hand. So it's like it could come today, it could come in a few days, it could come in 2 weeks. It could come if it comes in several months, it's kind of weird. Like something kind of weird has to happen. If it doesn't come now and it comes in a couple months, a lot has to happen. Let's put it that way. I mean, we either have to range here for a long time, or we have to probably push up into the highs and come back to the lows. So I'll put it this way: like the level looks really good to me. Like, let me get rid of all this shit. The level looks really good to me. Oh, almost always, because there's so much horizontal confluence there that it doesn't really matter to me, in a sense. I don't know why this happens. Right. It doesn't really matter to me, in a sense, when it comes. Because this pivot low, this point of control, the log scale GP, etc., 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 all look really good. What does kind of matter from a timing perspective is I would love for it to intersect with this trending structure, as like it's a really nice trending confluence. That has about 19 days left. Basically, any time between now and the next 19 days that exists. The only thing that I would just say it doesn't really matter is I would probably just trade it anyways if that happens. So it's a nice confluence. It gives some sense of like if we are going to get that trending in confluence, then you might not be surprised to see it happen in the near term. I think if you're looking at this structure as relevant at all, and there's no structure really here, maybe these lows at 74K, you're probably not surprised to see it come in the near term. Like there's no reason to pick a day here. I would say that. I would say it's probably reasonable to think it wouldn't be surprising to see it over the next week to 2 weeks. That wouldn't be crazy. I mean, price is breaking down. We're in a big downtrend. I mean, you basically just need like something like this to happen. It would probably be strange for it to come in 2 months. I kind of like this range scenario. This is what I'm probably looking at. But yeah, I guess if we rally here, this happens and this happens, then it comes in 2 months. That said, I'm in shorts and ultimately wouldn't mind getting a short into that low, but just trading around local structure. Yeah, I don't know. I don't know how. There's no reason to answer the when. You can answer like, what would you be surprised to see or not surprised to see, or what would look kind of good. I wouldn't be surprised to see a quick move to the downside, but what's the benefit of it, right? I know like probably options. How did I draw the trend line at my short entry? It's this. I actually have this drawn as a channel. I deleted it. What the heck? I must have had it drawn a little bit off before. I was pretty sure this is the... That's close. Yeah, it's close. It's a little off. But yeah, this is I had this drawn as a channel earlier. And I don't mind it, potentially. Like you might end up with some channeling. But it doesn't really matter. I'm not looking for any more reasons to take this trade. It's like I literally know there's a 1% chance, I would say, that I'm not in this trade, and there's a pretty, yeah, like even in all the scenarios where this level doesn't hold and price breaks down, I'm in the trade. I already know, like, there's almost nothing that can happen here except for me staring at the chart and watching price just blow, like, from here straight through the level in 1 minute and not react at all, and then I'm not in the trade then, which I don't think is likely, but it could happen. Sometimes I'm on log scale, sometimes I'm on normal. I don't think, it just depends. Somebody's saying, okay, and I really will end the live stream after this. Somebody's saying, is trading swing failures with a 3R target a good strategy? It's not really a strategy. I mean, this is like a 3R target. It's like, is it a profitable? It just depends. I mean, it depends on a lot of things. Like, but so like, is this the setup here? 3R. So this is the setup. I feel like I don't like risk reward based strategies where it's like, oh, this is I trade this to 3R. It's like, this is a 10R setup. It's probably this, and I mean, it should at least be this or this. But why are you even ever, if you're in this short and you're just sitting here, why are you closing this? Like, this is kind of, it's probably a 6 to 9R setup, or it probably should be. And like, if you're in this long, you know, price runs down here. This is a little different because this low's probably coming a lot lower. I'm not saying probably, but there's a lot of cases where it will. I don't mind. I don't actually mind this 72K level getting hit. So if you're treating this as a swing failure, I mean, all of a sudden, if this comes, then your stop loss is 5% away. The top of the range is like 1.8R. I would be hoping to get in somewhere either tighter or lower if I'm gonna trade this as a sweep. But yeah, I don't know. I don't like it. Just the premise of like if I'm longing this, I'm not just arbitrarily saying what's 3R from my stop loss. I'd like to trade this as a range, and if I'm shorting this again in the future, I'd like to short it like this. I like to trade it back to new lows. And yeah, let me end the live stream. It's almost 4 hours long. I wanted to hang out, answer some questions. You know, maybe I have extra energy because for the first time in a long time, a big move came on a live stream. Usually we would just be sitting here watching price move in a 0.2% range for 4 hours, and just something more interesting to talk about, not waiting for a trade, in a trade, watching a strong rejection after a short. All right, guys, it's been fun, and I'll talk to you later. I'll do some X post saying I shorted the top on live stream. If you were there, you were there. I don't know. I'll post something. I think I do some of that stuff. It's like I think a lot of people can benefit from this type of information. Might not think that they'd be interested in a multi-hour live stream. Maybe have never watched anything like this before. And for some people, it will just be what they're looking for, right? It will just be some kind of it can lead to big breakthroughs. I mean, that's the story of the LATF kind of for a lot of people is they poked around. They said, "Oh, I'll take a look at this," and like, "Oh wow, I've never heard of any of this stuff," and then it sends them down a new path. All right.